talking about your payment areas where you have three ledgers. When you talk about your payment chapter, you'll have three ledgers. One is electronic liability ledger, one is electronic credit ledger, and one is electronic cash ledger. Electronic liability ledger, credit ledger, cash ledger. Your gross output tax will always come under electronic liability ledger. Your ITC will come under electronic credit ledger. The net output tax that you have will be paid by cash ledger. Will be paid by cash ledger. Now, what will be that credited and debited in each of these three ledgers? Let us understand in a simple way. How liability is created? Liability is created by two ways. Assessee is self-assessing the liability as per when filing the returns. He is creating his own liability. He knows that he has made some outward supplies or sales. Therefore, he is creating his liability. Self-assessed liability. Self-assessed liability, or liability is not created by assessee. It is created by officer. Assessee is not showing full liability. Therefore, officer is creating the liability. Officer is creating the liability. And what all liabilities you can have? You can have tax, interest, penalty, late fees, any other amount. TIPLA. Tax, interest, penalty, late fees, any other amount. So that liability can be tax liability, interest liability, penalty liability, late fees liability, any other liability. Either created by assessee himself or created by officer. How assessee will create liability? Created by assessee himself means assessee will create by filing returns. How officer will create liability? Officer will create liability by giving notices. So this is assessee's created liability through returns. Officer's created liability will be by giving show cause notice and demand order. Giving show cause notice and demand order. This is creating liability. This is creating. How are liabilities closed? Liabilities are closed by paying through cash ledger or credit ledger. Either close it by cash ledger or, so whenever you're paying your liability, there will be a contra entry created in cash ledger and credit ledger. How are you going to close your liability? You have a liability of 10 lakhs. Or supposing you have a liability of 10 crores. How are you going to close it? Paid by credit ledger or paid by? So when you're paying it by credit ledger or cash ledger, don't you think that there will be corresponding effect in credit ledger and cash ledger? There will be contra entry. Your credit ledger will decrease, your cash ledger will decrease. Now, please understand that credit ledger can be used only for paying tax. Credit ledger can be used only for paying. You cannot pay special payments by credit ledger. Only tax can be paid by using credit ledger. Other liabilities. What are your other liabilities? Be it interest or penalty or late fees or any other amount. Even if it is composition tax amount, TDS, TCS, RCM. They can be paid only by cash ledger. What all payments can be paid only by cash ledger? Interest, penalty, late fees, any other amount. Wait, not only that. Composition tax, because composition scheme dealer will not have any credit ledger. RCM, you have to pay it by cash because it is not tax on outward supply, it is tax on, you have to pay it by cash, get in credit. Paid by cash, get in. So first you have to pay it by cash. TDS, TCS, government can pay TDS only by cash ledger. Electronic commerce operator can pay TCS only by cash ledger. It has to be paid only by cash. Only by cash. So these all liabilities can be paid only by cash ledger. Be it your interest, penalty, late fees, any other amount, composition tax, RCM tax, TDS, TCS. These 8 payments can be paid only by cash. So what is the payment that can be paid only by credit ledger as well as cash ledger? tax payable by regular scheme dealer. Output tax payable by regular scheme dealer. What is the tax? I'll tell the full statement. Output tax. It's not RCM. Output tax payable by a regular scheme dealer can be paid by credit ledger as well as cash ledger. So which has got limited utilization? Which ledger you can use it less? Credit ledger or cash ledger? Credit ledger or cash ledger? See, your liability will be closed either by credit ledger or which ledger you can use it limitedly. Credit ledger you can use it only for output tax payable by a regular scheme dealer. Cash ledger can be used for anything and everything. Anything and everything. Right. What is the other way that your liability get decreased? The other way that liability get decreased is officer is creating liability and you're challenging it in appeals. You're challenging it in appeals. Liability is created by the officer, but you're challenging it in appeals. Right? You are telling that no, this order given by the officer is not valid. You go to appeals, appellate authority or appellate tribunal or high court or supreme court, and the liability is being reduced. The liability was created by officer by giving demand order. If you are okay with it, pay it. If you're not okay with it, fight in appeals, appellate authority, appellate tribunal, high court and supreme court. That liability can be reduced. That liability can be reduced. Or if you're paying within a particular time, your penalty can be reduced. So when you see penalty provisions, you'll find that if you pay earlier, penalty will be less. If you pay earlier, penalty will be less. Both these points are different points. One, you're challenging the liability itself. You're challenging the tax liability itself. You're going for appeals. So when your tax reduces, tax, interest, penalty, everything will get reduced. One, you're not challenging the liability. You're ready to pay the liability. But earlier you pay, lesser will be the penalty. So here, when you're going for appeals, all liabilities will get decreased. Here, only penalty liability is getting decreased. Only penalty liability is getting decreased. You're paying it, but you're paying penalty earlier. Therefore, the penalty amount will be lesser amount. Penalty amount will be earlier you pay, lesser the penalty. Earlier you pay, tax will remain the same. Interest will remain the same. But earlier you pay, lesser will be the penalty. So how liability is created? By assessee, by officer. How liability is closed? Either by making the payment, cash ledger, credit ledger, or challenging it in appeals, That is how you pay, you close your liability. But one liability can be closed even by accepting it, but paying it earlier. If there is a penalty liability created by the officer, earlier you pay, lesser the penalty. So penalty liability can be reduced. Now, talking about cash ledger and credit ledger. First, talking about credit ledger. Please understand that how you get the amount in cash ledger and credit ledger. You have understood how credit ledger balance is used, how cash ledger balance is used. Now, it is very important to understand I cannot use credit ledger and cash ledger without getting an amount in credit ledger and cash ledger. Can I use my credit ledger without getting an amount? No. Can I use my cash ledger without getting the amount? No. How do I get the amount in? How do I get the amount in credit ledger? By filing return. Claiming the ITC by filing the return. I get the credit amount by filing my return. So when I am filing my return, I will show inward supplies input tax credit. Only when I show my input tax credit while filing the return, I will get the credit amount in credit ledger. And please understand that only if I get the amount in my credit ledger, I can use it. How do I get the amount in cash ledger? How do I get the amount in cash ledger? By depositing in cash ledger. Only if I deposit the amount in cash ledger, I will get the amount in cash ledger. Only when I get the amount in cash ledger, I can use it. So how do I get the amount in credit ledger? By filing my return and showing my inward supplies. I get the amount of credit ledger in my credit ledger. And I can use it for paying the tax liability. How do I get the amount in cash ledger? By making deposits. For what I can use? I can use it for any payment. I can use it for any liability. Not only tax liability, I can use it for any liability. Now, this is a basic understanding of credit ledger and cash ledger. How do I get the amount in credit ledger? By showing my inward supplies in my return, I'll get the amount in credit ledger. I'll use it only for tax liability. How do I get the amount in cash ledger? By making deposits, I'll first get the amount in my cash ledger. I can use it for any liability, not only tax liability, I can use it for any liability. Now, what are the other cases where I'll get the amount and I'll have the amount being removed? Now, understand that. Can I apply for refund of credit ledger and cash ledger? Can I apply for refund of credit ledger and cash ledger? Credit ledger refund is very rare. Only in two cases you can apply for credit ledger refund. Zero rated supply, that is exports and supplies to special economic zone, and inverted duty structure. That's technically something called as inverted duty structure. Your rate of tax on output is lesser than your rate of tax on inputs. Technically it is IDS. Just understand two cases. Can I get the amount of credit ledger? Answer is no. I can get it only two cases. Can I get the amount of refund of cash ledger? Yes. Cash ledger is like my fixed deposit. Cash ledger is like my FD. Can I break my FD at any point of time? Yes. So getting the refund of credit ledger is very rare, only in two cases. But can I apply for refund of cash ledger? Yes. Now when I apply for refund of credit ledger or cash ledger, whether my ledger will decrease or increase. Supposing I have 10 lakhs in my credit ledger or cash ledger. If I apply the refund, whether it will decrease or increase? Decrease or increase? So when I apply for refund of credit ledger or cash ledger, whether it will increase or decrease? It will decrease. And if refund is rejected, supposing out of 10 lakhs, I apply the refund of 8 lakhs. 8 lakhs will increase or decrease? I have 10 lakhs balance in my credit ledger or cash ledger. I apply for refund of 8 lakhs. 8 lakhs will increase or decrease? Decrease. Out of 8 lakhs, only 5 lakhs is sanctioned. 5 lakhs you get in your bank account. 3 lakhs is rejected. 3 lakhs is, that rejected portion will increase or decrease? Rejected portion will increase or decrease? That rejected portion will again increase. So from my 10 lakhs, when I apply 8 lakhs, it will get reduced. When there is a refund rejection, it will get added. So what will be my final balance? Assuming that there is no other transaction happening in my credit ledger, cash ledger. What was my opening balance? 10 lakhs. How much refund I applied? What is the amount that is rejected? 3 lakhs. I'm not talking about sanctioned amount. Sanctioned will get in bank account. What is the refund amount that is rejected? Application portion will get decreased. Rejection portion will get added back. Get added back. Clear? So this is how again my credit ledger and cash ledger balance will change. Now there are other certain special points. Now, if at all you're talking about TDS, TCS, TDS and TCS. TDS, TCS, understand that government will pay TDS, ECO will pay TCS. They will pay by cash ledger, but the opposite person will get in cash ledger. Opposite person will get it. So now, when I'm writing about TDS and TCS, I'm not talking about government, I'm not talking about ECO, I'm talking about supplier against whom government has deducted TDS or electronic commerce operator has collected TCS. They will get in their cash ledger. Government will pay by cash ledger TDS, opposite person supplier will get in cash ledger. So one will pay, one will get. Likewise, electronic commerce operator will pay TCS by cash ledger, one will pay. And the opposite person, that is supplier who supplied through ECO, will get in cash ledger. Will get in cash ledger. Right. So that is that. Now other special point which is that if I wrongly pay a tax amount and I am applying for refund, wrong payment of tax amount, I apply for refund, I will not get entirely in my bank account. I will get partly in my credit ledger, partly in my bank account. This can be a wonderful MCQ. Supposing in a particular month, I have paid 10 lakhs, my output tax, 8 lakhs, input tax credit, 2 lakhs is net output tax paid by cash. Correct? This is supposing the month of April 2025. Now suddenly I find out that the actual liability was 1 lakh. Now tell me, am I eligible for refund? I have paid 10 lakhs. Paid 8 lakhs by credit ledger. Paid 8 lakhs by credit ledger and 2 lakhs by cash ledger. But in total I have paid. How much excess I have paid? How much excess I have paid? Can I apply for refund? Yes, I can apply for refund of 9 lakhs. But wait, this entire 9 lakhs will not come to my bank account. Otherwise, I'll misuse it. Now, what will happen is when refund is given, 9 lakhs multiplied by a ratio. One portion I'll get back in my credit ledger. One portion I'll get back in my no cash ledger, bank account. I know when I tell credit ledger, the next understanding is cash ledger. No. One part I'll get in my credit ledger, one part I'll get in my bank account. Not if I get in my cash ledger again, I'll apply for refund of cash ledger. Why unnecessary? It will come to my bank account. It will come to my bank account. Now, what is the ratio in which I discharge my liability? 8:2. Whether right or wrong, I discharge my liability in the ratio of 8:2. So what amount will come in my credit ledger? 8 divided by 10. And what amount will come in by cash ledger? 2 divided by 10. 8:2. So 8 divided by 10, 2 divided by 10. So what is the amount that I'll get in my credit ledger? 7.2 lakhs. And what is the amount that I'll get in my bank account? 1.8 lakhs. So this corresponding amount will not be there in cash ledger. So if I have paid excess output tax, I'll get the refund. But that refund will proportionately go in credit ledger and bank account, not cash ledger. Credit ledger and bank account. In what ratio? In the ratio I have discharged the liability. I have paid 9 lakhs extra. I agree because my actual gross output tax liability was 1 lakh. By mistake, I showed it as 10 lakhs. Typing mistake. Some mistake happened. Possible. I'll get the refund of 9 lakhs. But that refund 9 lakhs will not come in my bank account. Partly it will go to credit ledger in the ratio of credit ledger is to cash ledger payment in that month. So 9 lakhs multiplied by 8 divided by 10. So that is 7.2 lakhs in my credit ledger. 9 lakhs multiplied by 2 divided by 10. That is 1.8 lakhs going to my bank account. Not to my, going to my bank account. Are you guys clear with this understanding? This is how your credit ledger and cash ledger will work. Now, please understand something more about your cash ledger. Now, entire discussion now will be focused only on your cash ledger. Something more about your cash ledger. So, when you talk about something more about your cash ledger, you need to understand the fact that when I tell by making deposit, you get the amount in cash ledger, it is not automatic. There are two-step process. One, you create a common portal identification number. This is the first step. Then you pay the amount. So first you create common portal identification number. And that this common portal identification number is only online. You can create only by online portal. You cannot create challan manually. It's possible only online. Even if you are unregistered. Don't worry. Even unregistered person will create a challan called as temporary identification number on portal. Registered person will create common portal identification number. Unregistered person will create temporary identification number. But the important point is you can create challan only online. You have to log on to your portal and then create a challan. When you create a challan, it is called as CPIN, Common Portal Identification Number. identification number, which is a 14-digit code. Which is a 14-digit code. And next step is making the payment. Making the payment. When you make the payment, after you make the payment, you get Challan identification number. Challan identification number, which is a 17-digit code. 14 digit is of CPIN and 3 digit is of the bank's branch code. Bank's branch code. So how you get the amount in cash ledger? It is a two-step process. What is the first step? Creating Challan. Second step, actually making deposit. When you create a Challan, it is called as CPIN. CP Common Portal Identification Number. 14 digit. 14 digit. So what if an unregistered person wants to make the payment? Possible. It will be temporary identification number. But in both the cases, you have to go on to the portal, GST portal. What is the second step? Making the payment. When you make the payment, what you will get? Challan identification number. What is, how many digits it will be there? 17. 14 belonging to that CPIN and 3 will be the bank's branch code. What is the validity of CPIN? Till how long? What is the time gap between CPIN and CIN? 15 days. What is the time gap between CPIN and CIN? The time gap which can be between CPIN and CIN is 15 days. Within 15 days, you have to make the payment. After creating the Challan, within 15 days, you have to make the, if not, don't worry, create another Challan. Don't worry, create another Challan. Again, create CPIN. No worries. Validity is 15 days. That Challan validity is over. Create another Challan. Create another Challan. Yes, please. You have to create another. That validity is over. Forget about the Challan. Create another Challan. Now, if I want to make payment for 3 months, how many Challan? 1 Challan or 3 Challans? If I want to make payment for 3 months, April, May, June, or July, August, September, or August, September, October, 1 Challan is sufficient. 1 Challan is sufficient. CPIN is online or offline? Louder. Louder. CIN, payment. It can be online or offline. It can be online or offline. So when you are making the payment, second step, the CPIN, first step is CPIN. When you read your first step, CPIN, along with CPIN, you also understood TIN. When you are reading the second step, CIN, you have to understand payments. Your payments can be online or offline. When it is online, you are talking about your UPI payment or internet banking payment or credit card or debit card. UPI, internet banking, credit card or debit card. Your offline payment will include NEFT, RTGS, immediate payment service. Even that is covered. NEFT, RTGS. Technically, it is not online. Technically, it is not online. It is offline only. Right? Or you can make payment over the counter, OTC. Over the counter payment, OTC. But when you are making this over the counter payment is only for what? When you are talking about over the counter payment, it is nothing but cash, check or DD. Cash, check or, so when I am talking about over the counter payment, it is cash, check or DD. Over the counter payment has a limit. Government wants to demotivate over the counter payment. So this has got a limit. What is the limit? 10,000 per Challan per tax period. It is not 10,000 per Challan. Otherwise, people are intelligent. They'll create, for 1 month, they'll create 3-4 Challans. So 10,000 per Challan per tax period. Per tax period. But this again has got an exception. Now this exception is very interesting. Government tells that we will not have any limit if at all the payment is to be made by us. So this will not hold good for government departments and persons notified by the commissioner. So when government departments and persons notified by the commissioner are making the payment, they can make any amount payment by cash, check, DD. No limit. No limit of 10,000 per Challan per tax period. Limit is for normal persons. Limit is not for, I said government will always excuse itself. Government department, no limit. Persons notified by commissioner, no limit. Now government will also excuse assessees. When? If government is forcing the assessee to make the payment. whether by recovering outstanding dues or during investigation, enforcement, or asking for ad hoc deposit, then government. See, officer is asking you. If he is asking you, no limit. If you are paying voluntarily, there is a limit. If you're paying voluntarily, there is a. But if officer is asking you to recover outstanding dues or during investigation or enforcement or ad hoc deposits by him, no limit. No limit. So government is very careful. In nutcrux, to whom this limit of 10,000 per challan per taxpayer is applicable? Is it applicable for UPI payments? No. Is it applicable for internet banking, debit card, credit card? Is it applicable for NEFT, RTGS, IMPS? No. Is it applicable for cash, check, DD, OTC? Yes. But when assessee is paying himself voluntarily, it is not applicable even for OTC payment if it is by government department or notified persons by commissioner or officer demanding an amount from the assessee and then assessee is paying. It may be to recover outstanding dues or enforcement activity or investigation activity or ad hoc deposit. Now, there is a special payment for OIDRS and OMG, SWIFT payment. So, foreign companies will have bank account outside India. So, for people outside India, they do allow SWIFT payments. Actually, it is not only for OIDRS outside India, it is also applicable for OMG who are outside India. They are allowed the payment facility by SWIFT. Their bank will connect to Indian bank and thereafter the payment will be made. Are you guys clear with this understanding? Are you guys clear with this understanding? So you're talking about SWIFT payment facility is only for foreign companies. Now here they have made it very clear. It is for OIDRS outside India who are sitting outside India but registered in India and paying GST in India. Or OMG outside India who are sitting outside India but paying GST in India. For them, SWIFT facility is allowed. Now, if you look at payment, cash ledger, how the amount is coming, it is quite clear. Now, the last thing that you need to understand all about all the three ledgers. Certain special points about all the three ledgers. One, when you are clearing the dues, liabilities, in which sequence you will clear it? First, you will clear assessee liability or officer liability. If at all you have multiple liabilities, first you have to clear whose liability? No. First you clear your own assessed liability. Then you think of officer liability. So sequences, first you clear your own liability, then you focus on liability created by officer. And within your own liability, if you have 2 months, supposing there is a own liability but of April month and May month. So within your own liability, first close April month, then close May month, then close. What is the sequence of closing down the liability? Assessee liability to be closed first or officer liability to be closed first? Assessee liability. When I tell assessee liability, all the liabilities, tax, interest, penalty, late fees, first you close all the liabilities. Assessee liability, then go to officer liability. When it is assessee liability and you have multiple months liability, you have April month liability, May month liability, June month liability, what to do? First close April, then May, then June. Officer liability may pertain to 2 years back, but still first close all your self-assessed liability, then go to officer assessed liability. Discharge, sequence of discharge of your liabilities. This is all about your liability ledger. How to close your this will be applicable if you have multiple liabilities. This will be applicable if you have multiple liabilities. How to close your, how to use your credit ledger. Now this is all about liability. Multiple liabilities, how to close it. Now I am talking about how to use your credit ledger. Now please understand that credit ledger will be used only for the purpose of tax liability, correct? Output tax payable by assessee. Output tax payable by assessee. It can be used only for paying output tax payable by assessee himself. Regular taxable person. Output tax payable by regular taxable person. Now can credit ledger be used just like that? That's a sequence. First touch IGST credit for paying IGST output, then CGST output, SGST output in any ratio, any proportion. So first you have to touch IGST input tax credit for paying IGST output, then for paying, if there is any balance, then for paying CGST output, SGST output, any ratio, any proportion. Treat this IGST as your elder brother who's married, right? CGST mother, SGST wife. So first, who will discharge liability at that house? That particular elder brother will discharge. How? First he'll take the credit, use it for himself, then use it for mom and wife, any ratio, any proportion. He'll not take the risk. He'll keep the amount and he'll tell that whatever amount you want, you take it. Then who will come in picture? If there is a house having your elder brother, his wife and mom, who will be the first person to contribute to the family in general? Elder brother. First, you are using IGST credit. Elder brother is called as IGST credit. First, he will use for himself. He's selfish person. First, he will use for himself. Then, for mom or wife, he will not take that risk. He'll keep the balance amount. He'll tell that in whatever ratio you want, you take it. Whether your elder brother will take the risk of giving first to his mom or first to his wife, no. Keep that balance amount, take in any ratio, any proportion. If his pocket is fully zero, then you will touch, then who will contribute to the family next? Mom or wife? Oh, wife. Who will contribute to the family next? I'm not talking about to herself. I'm talking about to the family. To the family. For the family, who will be the contributor next? Mother. For herself, wife. But for the family, mother. So mother will use first for whom? No. Normal feeling is mom will use for son first. But mother has seen her son changing colors. Before marriage, her son was always revolving around her. After marriage, after marriage, after marriage, that person revolves for some time only around wife. So mom is afraid that telling that I don't know whether this person will take care of me or not. So because of that, CGST credit first used for, so she is being cautious. CGST credit first used for CGST output. If there is a balance, whether mom will give to her son, yes, CGST credit. If there is a balance, give it to IGST output. If there is still balance, whether mother-in-law will give to daughter-in-law. Louder. Whether mother-in-law will give to daughter-in-law. Even if there's a balance, mother-in-law will call daughter-in-law. See, there's a balance. I'll not give you a single paisa. I'll not give you a single paisa. Who will be the last person to contribute to the family? Elder brother's wife. First, without any doubt, she'll use for louder. So she'll use for herself. SGST credit first use for SGST output. If there is a balance, whether she will give to her husband out of mercy, she will give to her husband. So SGST credit first for SGST output. Then if there is a balance, SGST credit for IGST output. For IGST output. By any chance, if there is a balance, whether daughter-in-law will give to mother-in-law. Daughter-in-law will call mother-in-law, tell that I use the credit for first myself, then for my husband. That is the balance, but I will not pay you a single paisa. Clear? So what is the sequence? First, IGST credit for IGST output. Then CGST output, SGST output, any ratio, any proportion. Only when IGST credit becomes 0, you can touch CGST credit. Then CGST credit first for CGST output. If there is a balance, it can be used for IGST output. If there is still balance, CGST credit can never be used for SGST output. Finally, when this is used to the maximum, last person to come, SGST credit first used for SGST output. If there is a balance, IGST output. If there is a still balance, but SGST credit can never be used for CGST output. Can never be used for CGST output. When you're working out your credit utilization, work it out in 3 lines. IGST credit, CGST credit, don't go with ICA presentation. Work it in 3 lines. then try to calculate. Your mind calculation will be important. Your mind calculation will be very, very important, because your answer will change when it is IGST credit used for CGST output, SGST output, any ratio, any proportion. You have to try to balance in such a way that credit is used to the maximum. Credit is used to the maximum and your payment by cash is minimum. Your final payment by cash is, so here you will be applying. In other places you cannot apply your mind because that's the sequence. But this is a place where you have to apply your mind and see how cash payment finally can be minimized. Trial and error. How cash payment in the end can be minimized. And if it is compensation sales credit, one-on-one. Compensation sales credit can be used only for compensation sales output. One-on-one. One-on. And finally, when you talk about cash ledger. Cash ledger. Cash ledger is more strict. How many pockets you have in your cash ledgers? 20 pockets. 4 major pockets. IGST, CGST, SGST or UTGST, compensation sales. 4 major heads. In all these major heads, 5 minor pockets. Tax, interest, penalty, late fees, others. So totally how many pockets? In all the major heads, 5 minor heads. So totally how many pockets? Now cash ledger utilization is very, very strict. If I want to pay CGST interest, I should have cash in CGST interest. If I want to pay SGST penalty, I should have cash in SGST penalty. If I want to pay IGST tax, I should have cash in IGST tax. It is actually very strict compared to credit. Credit at least the sequence. But understand, though it looks very strict, there's a way out. You can transfer from cash ledger of one head to other head and balance. Can I transfer from CGST tax to CGST penalty? Yes. Can I transfer from CGST tax to SGST penalty? Yes. Can I transfer from CGST tax to IGST interest? Yes. Among 20 heads, you can transfer from any head to any head. Any head to any head. Any head to any head. See, using is restricted. If I have to pay IGST penalty, I should have amount in only in. I can use one-on-one only, but transfer is allowed. So, if I give a question where I tell that you have amount in CGST tax cash ledger, but you have to pay SGST penalty liability. One is cash, one is liability. How you will transfer? Supposing you have CGST tax cash ledger 1 lakh, but you have to pay SGST penalty 1 lakh. So what is the thing that you'll do? Step number 1. Transfer from CGST tax cash ledger to SGST penalty cash ledger. Cash ledger. Transfer is from one cash to, as she rightly said, any head to any head. Among 20 heads, you can transfer one cash to one cash. This is transfer. This is actually transfer. Transfer from one cash ledger to another cash ledger. Second step. Now you get the amount in SGST penalty cash ledger. What to do? Use SGST penalty cash ledger to close SGST penalty liability. Now you are setting up the liability. Now you are using cash ledger to pay liability. So transfer is of cash to cash, correct? So transfer is of cash to cash, and liability closing setting off is of cash to liability. Finally, your cash will become 0, your liability also will become 0. Utilization is restrictive, one-on-one. It is, if I have to pay SGST penalty, I should have cash in SGST penalty only. But that's a solution. If I have cash in any other pocket, can I transfer? I can transfer from CGST, IGST, SGST, any tax to any cash to any cash. Any cash ledger to any cash ledger. So what I did, I transferred the cash amount in CGST tax cash ledger to SGST penalty cash ledger. CGST tax cash ledger to SGST penalty cash ledger. Clear? Finally, my cash ledger will become 0. My liability will become 0. I had to pay something. I had in something. Correct? Liabilities, I have to pay something. I had in something. It is possible. Understand, this is possible only in cash ledger. Do not mix credit ledger and cash ledger. Credit ledger, no transfer possible. No transfer possible. Credit ledger, no transfer, but there is a sequence. There is a sequence. Cash ledger, there's no sequence. One on one. It is one on one. But there's a solution. What is the solution? You can transfer, then you set off one on one. You can transfer, then set off one on one. Now, one important point that you need to understand, when you're transferring from one cash ledger to another cash ledger, at times back-end transfer will happen from central government to state government. See, this amount actually I paid to whom? Initially, when I paid this amount, I paid to central government because the amount was there in CGST tax cash ledger. But whose liability is closed? State government's liability is closed. SGST penalty is now closed. But state government is, my liability is closed without getting any amount. Without getting, assessee did not pay anything. Central government tells, don't worry. We'll transfer in the back end. We'll transfer in the back end. Section 53A. We'll transfer in the back end. So back end, there will be a transfer. Back end, there will be a transfer by central government to state government, 1 lakh. Assessee will not do anything. This is government to government. This is government to government. This will happen only when cash ledger transfer is happening between C and S or I and S. Not C and I, because C and I belongs, the amount is there with central government only. This will happen when the amount is transferred from C to S or S to C or I to S or S to I. Not between C and I. Not between. If there was a transfer from CGST tax cash ledger to CGST interest cash ledger, nothing. Transfer from CGST tax cash ledger to IGC penalty cash ledger, nothing. Only when it is between C and S or I and S, this back end transfer will start. Because now it involves central government and state government. Now understand the logic of back end transfer. Assessee paid 1 lakh to whom? Central government. Look at the question carefully. Assessee paid 1 lakh to whom? He paid only to central government. Therefore, the amount was there in CGST tax cash ledger. But whose liability is closed? State government. Don't you think that state government should get something now? It is not getting from assessee. It will get from central government. Central government will transfer to state. It can be ulta also. The question could have been ulta. I would have had amount in SGST tax cash ledger, but I should close my CGST interest liability. Then it is ulta. State government will transfer to. It is ulta. It is actually ulta. So this is the logic. Are you guys clear with this understanding? Are we guys clear with this understanding? Now, very, very clearly, people should be very clear. Utilization of credit ledger is in a particular sequence. Here, there is no sequence. It is 1 on 1. It is 1 on 1. But understand that credit ledger you cannot transfer. But though there is 1 on 1, you can transfer. And transfer is not only between one head to another head within same GST number. Transfer can be in the same GST number, any head to another head, any head to any head, or between two different GST number, distinct person. Between two different GST number, same company but two different GST number, distinct person. One in Tamil Nadu, one in Maharashtra. Reliance Limited in Tamil Nadu, Reliance Limited in Maharashtra. So can I transfer the amount of cash ledger from Reliance Limited Tamil Nadu to Reliance Limited Maharashtra? Yes. So it is not only between 20 heads, it is between any of the 20 heads in one GST number of Reliance Limited in Tamil Nadu to another GST number in Maharashtra. But here, please understand, this technically not 20 heads. This transfer from one state to another state is only facilitated through C and I. You cannot use yes. And if you understand it, it will be very clear. If at all I have a balance in S in one GST number and I have to pay S in another GST number, don't worry. In Tamil Nadu, you transfer from SGST to CGST. Within Tamil Nadu, SGST to CGST is allowed. SGST cash ledger to CGST cash ledger. Then CGST cash ledger of Tamil Nadu transfer it to CGST cash ledger Maharashtra. Then CGST cash ledger Maharashtra transfer to SGST cash ledger Maharashtra. Then close the amount. They don't want directly states to deal with other state. You can route it through central government. This is the highest complicated level. You need not focus on it fully, but understand two important points. What are the two important points? Credit ledger utilization is as per a sequence. Whereas cash ledger is one-on-one. It is credit ledger. Can I transfer CGST credit ledger to SGST credit ledger or IGST? No, you cannot transfer credit ledger. You cannot transfer. When I tell you cannot transfer credit ledger, forget about different GST number. Can you transfer cash ledger? Yes. If it is within same GST number, any head to any head. If it is within two GST number of the same company, that is distinct person, transfer should be, when it is one GST number to another GST number of the same company, it should be through C and I, only through C or I, but within same GST number, it can be C, S or I. C, S or I. So that is possible. That is everything about your liability ledger, credit ledger and your cash ledger. Everything about your liability ledger, credit ledger and your cash ledger. So when you talk about your interest on late payment, it is discussed in section 50. Section 50. So when you talk about our interest on late payment, there are two categories of interest. One, interest on late payment of your output tax. Interest on late payment of your output tax. This is the first category. Second, interest on wrong availment and wrong utilization of your input tax credit. So first area is you're paying output tax, net output tax, you're paying late payment of output tax. Second area is you've availed the credit wrongly, and availment is not a problem. You've used the credit wrongly. The wrongly availed credit has been used wrongly. So difficulty is not availment. Problem is not availment. Problem is utilization. And the rate of interest in both the cases is 18% per annum. The difference is on late payment of output tax, directly the percentage is 18% per annum. Here the maximum notified rate could be 24% per annum, but the effective rate is 18% per annum. 18% per annum. So what are the two categories of interest? One, your late payment of output tax. Two, wrong availment and utilization of input tax credit. What is the rate of interest? 18% for the first case. Second case, maximum rate is 24%, but the applicable rate is, so for your net exam purposes, it is 18% in all cases. 18% per annum in all cases. Clear? Now, when you talk about the first category, late payment of output tax. If your gross output tax is 10 lakhs and if your ITC, right ITC, you're not talking about wrong availment and utilization of ITC, normal credit. If your ITC is 8 lakhs, how much you're going to pay by cash? Your net output tax, 2 lakhs will be paid by cash. The amount that you're paying by ITC is payment by electronic credit ledger. The amount that you're paying finally net output tax, it is payment by electronic cash ledger. Correct? Now, first of all, due date of payment is always equal to due date of return filing. Correct? Except in two cases. What are they? Regular taxable person, casual taxable person, QRMP scheme. QRMP, we have seen the due dates. QRMP scheme first month, 25th of next month. April month, 25th of May. May month, 25th of June. June month, 22nd or 24th of July. Clear? After the due date, interest will start. After the due date, interest will start. If you're making the payment within the due date, whether there's any interest, no. Payment itself, interest itself will come if the payment is made after due date. What is the second scenario where your due date of payment is not equal to due date of return filing? Composition scheme. Because payment is quarterly, April to June, 18th to July. July to September, 18th October, so on, etc. etc. Other than these two cases, RTP, CTP, QRMP scheme, and composition scheme dealer, all other cases, whatever is the due date of return filing is your due date of payment. If you are making the payment late, interest will come. Interest will come. Interest is going to come. Now, when interest is going to come, the question is whether, supposing we are talking about the, I'll give a context so that you have a clarity. Supposing it is April 2024 and finally payment is made on 25th May 2024. So what is the number of days of delay? Clear? So 21st May to 25th May, which means 5 days. You'll ignore 20th May. You'll start calculation from 21, 22, 23, 24, 25. That's the 5 days delay. That's the 5 days delay. Now, you clearly are aware of the fact that interest rate is 18%. How many days delay? 5 days. How many days delay? 5 days. For calculating interest, you require 3 elements. Principal, rate and period. You know the rate, you know the period. What is the principal amount? Whether the principal amount is 10 lakhs or 2 lakhs. Whether the principal amount is gross output tax or net output tax. Normally it is net output tax. But when this net output tax will be applied and when this gross output tax will be applied. Normally it is net output tax, but there is a condition. It should not be found by the officer. It is not after officer is finding it. It is not a case where officer has initiated it. Under section 73, 74. It should not be initiated by the proper officer. And you are reporting that transaction in same month return. Same month return. April transaction reported late. But in April return. But in April return. But in April return. When this will be on gross output tax. 2 cases. Either proper officer has initiated case under section 73, 74 or it is 1 month transaction reported in subsequent return. Reported in subsequent month return. Subsequent month, which means if I tell that April month transactions, I did not report it. I forgot. It can happen. There can be error or omission. I omitted it. Suddenly, I remember to put that in July month. Now, April month transactions there, but I am reporting in July month. So, interest will be on gross output tax. Interest will be on. So, when interest, these two areas are the same. Rate of interest is 18%. Period of delay is whether it is gross output tax or net output tax. If at all, normal scenario, you will not get a notice. Correct? Normal scenario, even if you are filing late, you are reporting in the same month. Correct? You are reporting April month transaction in April return. What is the special scenario? Either you got a notice from the officer, then you're reporting it. Or April month transaction you forgot to report in April month, you reported in subsequent month, then that's a problem. Then you will go with gross output tax. Otherwise, normally you'll go with net output tax. Are you guys clear with this understanding? Normally, if you get a question by ICI, it will be this calculation. Correct? It will be this calculation. But if I am ICI, I'm going to give an interesting question where there is an April month transaction, July month transaction. Output tax 10 lakhs, input tax 3 lakhs. Output tax 20 lakhs, input tax 15 lakhs. April month, I filed nil return by mistake. July month, when I'm filing, I'm including April month transaction plus July month transaction. July month, when I'm filing my return, I realized my mistake in July month that I did not report in. Can I rectify my mistake? Yes, I can rectify my mistake not only in this July month, I can rectify till 30th November of next financial year or actual date of filing of annual return of that financial year, whichever is. This is actually done within the same year. So I still have a lot of time. Correct? So assuming that this is April 24 and this is July 24. I could have rectified till 30th November 2025 or actual date of filing annual return of that financial year, that is 24-25, whichever is earlier. Now I filed July return. On 30th of August. I included both these transactions. I filed the July month return on 30th of August. Calculate interest. Now, how to calculate interest? First of all, don't make the mistake of calculating interest together. Calculate it separately. Don't make this mistake. Calculate it separately for the month of April 24 and calculate it separately for the month of July 24. What will be the April month interest? Gross output tax or net output tax? Gross. Why? April month reported in July month. April month reported in. So it will be on gross output tax. What is the gross output tax of April month? Multiplied by 18%. Multiplied by 18%. Multiplied by how many days of delay? For April month, what is the due date? 20th May 2024. When this finally is filed. So what is the delay? May month 11 days. June 30. July 31. August 30. So 102 days. 102 days. You use your calculator and find the answer. I'm not interested in the number. This, you will take the help of your calculator and find it out. It is 50,301. Wait, that's not the final answer. Plus July month interest. July month, I reported July month in July month return. So gross output tax or net output tax? Gross output tax or net output tax? What is the net output tax? In the previous case, gross output tax. Now it is net output tax. So what is the net output tax? 5 lakhs multiplied by 18%. Multiplied by delay. What is the delay? What is the due date for your July? 20th of August. When did you file it? 30th of August. So what is the delay? Delay is only 10 days. What will be the answer? Pardon? 2465. Rounding off to nearest rupee 1 in indirect taxes. Nearest rupee 1. Add both. You'll get the final answer. 50,301 plus 2465. It will be 52,000. So if I say really wants to test your mind and see whether you have really understood the concept of gross output tax, net output tax, it should give a very practical question like this, which is not being given till date. This is a very practical question. Practically, these things will happen. Practically, only these things will happen. Only then you have to calculate interest. It will not be that it is 1 month and 2. If at all you are reporting in subsequent month return, it might happen that that subsequent month return is also filed late. If you are reporting April month and July return, April month transaction, July return, it is highly possible that July month return is also filed late. So then you should have two interest calculation running simultaneously. You should have two interest calculation running simultaneously. Are you guys clear with this understanding? That's the first part of your interest. Yes, please. There's no last date till you file it. You change the date. If it is till 20th of September, interest will go to the 20th of September. Number of days will increase. Till the date when you have filed the return. Finally, we have filed your return of July month when 30th of August. Then the number of days will increase for both. It's not about gross or net. It's still on net only. It will never change to gross. It will change to gross only and only when proper officer will do it. Now, her question is, what if July month return I file it in September or October or November or December or Jan or Feb or March, next year April, etc., etc. Go on. Because you can file your return maximum till 3 years of due date, correct? Go on. I'm not getting any notice. Now it will change to gross output tax once I get a notice under section 73-74. Till I get a notice under section 73-74, I will enjoy going by net output tax for July part. July part reported in July return. So whether it is filed in September month or October month or November month or December month does not changes any answer till I get a notice. Why? I am reporting July transaction in July return. I am filing it very late, but I am reporting July transaction in July return. I may file it in September or October or November or even December, Jan, etc. Till I get any notice from proper officer under section 73-74, I am going to enjoy the benefit of paying interest on net output tax. And by the way, this net output tax can be zero. In July month, my gross output tax can be 20 lakhs and ITC can be 21 lakhs. So net output taxes, I will not pay any interest. Even if I file July month return in August, September, October, November, December, Jan, Feb, etc., etc. Till I get a notice, I have to work out on net output tax. And by the way, net output tax, people feel that always it will be a number. No, it can be zero. If I change the question by July, for July month, gross output tax 20 lakhs and input tax ready 21 lakhs. What is my net output tax? I will not pay anything by cash. 1 lakh credit carry forward will be there. I will not pay. So answer will be 0 multiplied by anything. It will always be 0. Even if it is filed in September, October, November, December, till I get a notice. Till I get a, when will I switch over from net output tax to gross output tax? There are only two possibilities. One, July month transaction reported in another month. But in this case, it is July month transaction reported in July month. One more possibility. I get a notice from proper officer under section 73-74. Till that point of time, I'll enjoy. So I'm not giving any date because I don't know when proper officer will give me a notice. So the question asked by you, I don't know when till proper officer gives me notice, I'll enjoy the calculation of interest on net output tax. Net output tax. So there's no such deadline. Are you clear with this understanding? Are you guys clear with this understanding? This is interest first part. What are the two parts of interest? One, interest on delayed payment of output tax. Late payment of output tax, which you have completed. Second, wrong availment and utilization of input tax credit. Wrong availment and wrong utilization of input tax credit. Now, this I need to make you understand with a particular example. Supposing, are you clear with this particular previous point? No problem. I'll just repeat this particular point. Your question was, till what point of time this July month return, if I file in September or October or December, will my calculation change from 5 lakhs to 20 lakhs? From net output tax to gross output? Answer is no. It will still remain net output tax till I get a notice. Because gross output tax is there only in two cases. What are the two cases? July month transaction reported in subsequent month return. I am not reporting in subsequent month return. When I tell I am filing in September, October, November, December, I am filing my July month return. Yes. If I don't file July month return, can I file August, September, October, November, December? None? No. I have not filed. I have stopped filing my returns after August. Sorry, after June. So July month return I am holding. I have not filed in August, September, October, November, December. Suddenly I file in the month of Jan. When I file in the month of Jan, whether July month transaction are reported in July return? Yes. Are they reported very late? Yes. Did I file my subsequent month returns? No. Till I file my July return, I cannot file subsequent month returns. So this July month transaction reported in July return. Did I get any notice from the officer? Now I think you get your answer. So obviously, if I'm telling that I'm filing my July month return in January month, I'm filing it very late. And if I don't file my July return, obviously understandable that I cannot file all my subsequent returns are on hold. I did not file even my subsequent returns. Now talking about the second part. Wrong availment and utilization of credit. Supposing while filing my April 2024 month return, right, and April 24th month return I have filed on say 22nd of May. I filed it late. I have claimed, there's a wrong claim of ITC. That wrong claim of ITC happened and I've wrongly claimed ITC of 1 lakh. But I sufficiently have credit balance in my credit ledger. I am running a business where my credit ledger is very high. My credit balance is always there. Now, till my September 24 return, my credit ledger balance is always more than 1 lakh. Though I have wrongly taken that credit, my credit balance is always more than that amount. When I am filing my October month return, and I am filing my October month return obviously in the month of November, somewhere around say 25th of November, I have lost my credit balance. My credit balance becomes 0. My credit ledger balance becomes 0. This was the wrongly availed ITC. When I tell my credit balance becomes 0, only now I have used that credit. Correct? Only now I have used that credit. I have taken it, but I never used it. It was there with me, but I never used it. Now, while doing my GSTR 99C, somewhere in the month of November 2025 month, I pay it by DRC 03 voluntary challan on say 30th November 2000, not 24, 25. 30th November 2025. I reverse it. 1 lakh amount that I've wrongly taken, I reverse the credit. Now, it is very clear that I have to pay interest on 1 lakh. Correct? I have to pay interest on 1 lakh. I have to pay interest on 1 lakh. What is the rate? 18%. What is the rate? 18%. So multiplied by something divided by 365. Now the question is, what is that something? That should be a starting point from, and that should be an ending point to. Now tell me one thing very clearly. Till what date interest will continue? Till what date interest will continue? Till I have corrected my mistake. When did I correct my mistake? 30th November. Clear? Clear? This is very clear that till 30th November 2025, interest will continue. From which date? There are now two dates. One is a date where I have wrongly availed the credit. One is a date where I have wrongly utilized the credit. One is a date where I have wrongly availed the credit. One is a date where I did wrongly avail the credit on 22nd of May. But I did not use it. Why? My credit ledger balance was always more than. When did I wrongly use it? 25th of November while filing October month return. And if you are doing that, wrongly using it while filing your October month return, that from date is actual date of October return filing, which is 25th of November, or due date of October return filing, which is 20th of November, whichever is earlier. Because I'm making that 4 days delay also. So which is earlier? My interest will start from 20th November 24 to 30th November 2025. Now, what is the day of delay now? So, November month will have balance how many days? From date is always included. November month will have balance 10 days. Then December 31. Then Jan, Feb, it is not a leap year, 28. March, April, May, June, July, August, September, October, November. So it is 360 directly. So 360, there are the 370, 71, 72, 73, 74, 75. Is it 375 days? It will be 375 days. 375 more than 1 year. So obviously your interest will be more. You're getting that? What if I tell that my credit balance was always more than 1 lakh even till 30th of November 2025 and I reversed it? I will not pay any interest. Why? I took the credit wrongly, but I never utilized it. Now I can make a lot of variations. What if I tell that initially when I wrongly used it, my credit balance dipped at 75,000. So on 25th of November 2024, while filing October return, my credit balance dropped down, but it did not drop to zero, it dropped to 75,000. So how much wrongly utilization I have done? 25,000. So interest will be on 25,000. No sir, we'll make it more interesting. First my credit balance dropped at 75,000 and it remained more than 75,000 for some point of time. Then it dropped to zero. So interest will be calculated in two parts. One for 25,000 because 25,000 was wrongly utilized at a different point, and one for 75,000 because 75,000 was used at wrongly at different point. Right. So you'll have two interest calculation. One for 25,000 because you used it at a particular point of time. One for 75,000 because you used it later. Supposing while filing October return on 25th November 2024, your credit balance dropped down to 75,000. So how much you have wrongly used? Interest will be on only. Other calculation being the same. Interest will be on only. Then suddenly in January return, your credit balance became from 75,000 it became. Then interest will be on balance. But from point will be different for both. End point will be the same. From point will be different for both. Clear? That's all. It's all about wrong utilization. Now, there are one particular change. I'll just tell that one particular change. At times, your credit balance comes down not because of filing October month return, but because of paying old dues. Old dues on 25th of November. You're paying your old dues. You have got a notice. You're paying your old dues by DRC 03 Challan. In that case, your credit balance is wrongly utilized not because of filing October return, but because of paying old dues. If at all it is coming down because of filing a particular month return, it is actual date of return or due date of return, whichever is earlier. If at all it is because of old dues, there cannot be any due date. There cannot be any. So interest will start from 25th. When you're paying the old dues, so November month, what is the delay? November month, what will be the delay? November month delay will not be 10 days, it will be 5 days. So your 375 days will become 370 days. That's it. Whatever I have written in light blue color is the change. See, starting point, one thing is very simple. Your interest calculation will start when you are wrongly availing the credit or using the credit. Availing or using. Utilizing. Correct? Forget about availment date, utilization date. What is the date of wrong utilization? What do you mean by starting date? Date of wrong utilization. Date of wrong utilization of credit. If it is because of filing return, if it is because of paying old dues, it is because of filing a return, then it is actual date of that return or due date of that return, whichever is earlier. If it is because of paying old dues, it is the actual date of paying old dues. This is the starting point from date. This is the from. To date is never a problem. Till date will be till you correct your mistake. Till you reverse that amount. So from date normally is, normally when you wrongly use your credit, only while filing your return you will do it. Normally old dues will not come. You will keep filing monthly return. While filing a particular monthly return, your credit balance will be coming down. You have wrongly used your credit. So actual date of that return, in our example October return, or due date of that return, October return, whichever is earlier. Though you have wrongly availed in April month, but you have wrongly used while filing October month. If at all it is because of paying old dues, it is the actual date of paying old dues. This is what we are talking about from date. Is it possible that I have wrongly availed and utilized the credit in the same month? Yes. I wrongly availed the credit in April month. In April month itself, my credit balance became same thing. So now interest will start from April month actual date or due date, whichever is. We are not focusing on wrong availment. We are focusing on, in this all example, I said that you wrongly availed in April month return, but you used in. Is it possible that I wrongly avail the credit and wrongly use it in the same month? Highly possible. 90% cases will come under that category. I don't have any carry forward credit. In that month itself, I have used it. So what would have been your answer? From date would be actual date of April return 22nd May or due date of April return 20th May, whichever is. So interest would have started from 20th May 2024. Clear? You can have multiple permutation combination. I think I've explained all the permutation combination except one might be that is her question. I'll try to explain that as well. If I have a credit balance of 1 lakh in April month, I wrongly availed it. I did not use it. I used it while filing my October return. It became 0. So interest will start in April or somewhere in for October. It is not technically October, it is actual date of October return or due date of October return, whichever is. Again, my credit balance in December goes to 2 lakhs. Then I have that 2 lakhs more. Will there be any change in answer? I wrongly availed. I fully utilized it. Again, my credit balance, it was more than 1 lakh. It became 0. Now it is more than 2 lakhs. It is not more than 1 lakh. It is now more than, forever it is going more than 2 lakhs. Whether your answer for interest will change? No. Once I have wrongly availed and used it, interest starts. Thereafter, whatever is your story is your story. You cannot tell that, no, I did Ganga Snan now. I'm coming out now. I'm very fresh. My credit balance has again come up. No, not possible. So once it is wrongly availed and utilized, interest starts. Thereafter, your credit goes up. No use. You have wrongly availed. Government gives a very logical calculation. It's all based on your financial management. Wrongly availed, wrongly utilized. Government is having that loss at that point of time. Thereafter, your credit is increasing because of your new month's purchases. It has got nothing to do with the old mistake. Old mistake. Interest will start. Interest will start. Are you guys clear with this understanding? Unfortunately, ICA is obsessed with asking interest questions only pertaining to wrong or late payment of output tax. Such beautiful questions can be asked from this area. I think I have given a wonderful question where your credit utilization may not be fully. Wrongly availed 1 lakh, then used 25,000, then again used, so 75,000. Your interest will run separately for 25,000, run separately for, on what basis? Same basis. I need not explain you. I have explained the basic concept. Now you can keep adding, and you know that for 25,000, if I have used it while filing October return, starting date will be due date of October return or actual date of October return, whichever is earlier. End date will be till I correct my mistake. 75,000 I have done while filing my January return. Then 75,000 interest will start from actual date of January return or due date of January return, whichever is earlier. From date till I correct my mistake, it will keep on going. Right. So interest can be worked out even in 2 parts. Yes, please. I'll correct my mistake by paying it by my DRC 0 challan when I'm taking my annual return to my chartered accountant, which is not mandatory. I could have filed myself, but my CA tells that you have taken wrong credit of your motor vehicle. Now you please correct it. So why will you correct it while filing your annual return? Though it is not mandatory, you will correct it. You CA is telling that till you make this payment, interest will go on. Now at that point of time, you tell that okay, let me only pay the wrong credit amount. I'll pay by cash or credit. If credit is available, I'll pay it by credit. If credit is not available, I have to pay it by cash. So DRC 03 challan is both by, if you have credit at that point of time in 30th November 2025, you pay it by credit ledger. If not, you pay it by cash ledger. So at that point of time, what you have in your balance, you use it. If you don't have credit ledger in your balance, you pay it by cash. So you have corrected your mistake, but you have corrected your mistake only of the tax amount. Interest portion will be worked out. Interest will stop till I corrected my mistake. Even if I am paying interest later on, interest will stop on 30th November 2025. Rather, a good CA will always tell that when you're paying this reversal of ITC, pay with interest. Even if I'm not paying interest, I have corrected my mistake now. So interest calculation will stop at 30th November 2025. 30th November 2025. So this area has not been tested by ICA. Correct. Because interest is only 18% per annum. So you'll pay only 18%. What are you doing with 1 lakh again? Tell me again. 1 lakh you have wrongly availed and utilized. Did you pay back again? Yes. What are you doing in November 2025? What are you doing in November 2025? You are reversing credit. When I am telling reversing credit, it means you are making the payment of that credit that you have availed. You are making the payment. If you have credit ledger, paid by credit ledger. If you don't have credit ledger, paid by cash. So I'm not going in depth for that. That depends on what you have at that point of time. So I've clearly said you corrected your mistake. Somewhere in next year, someone pointed out that you have taken wrong credit and you realized it and you have corrected your mistake. If you did not correct your mistake, you will never get your due date. Interest will keep on adding. If I have not reversed it, if I go with your question, I have not corrected it, interest will keep on accruing. But in this question, I have clearly, categorically said that I have corrected my mistake. I realized that mistakes somewhere in November 2025 and I did correct my mistake by reversing it. So interest will be there only till that point of time. Pardon? I have corrected it by DRC 03 challan, and that is the reason I wrote DRC 03 challan. Voluntary payment. Voluntary, I paid it by credit or by cash. So once I have paid it, interest should stop. I took wrong credit. See, there's wrong availment and utilization are not two separate 1 lakh and 1 lakh. I think you're getting confused with 1 lakh. Same 1 lakh. You have taken wrongly in April, used in October return. So it is not 1 plus 1. It is same 1 lakh. The same 1 lakh which you have taken in 1 month but used in other month, which you have corrected in some other month. You have corrected in some other month. So you have done your mistake. You have did a mistake, you corrected it. If you have not corrected it, interest will keep on adding. Interest will keep on. Right. So this area is untouched by ICAI. I have been waiting for a long time. Till now, ICAI has not touched it. But once I have explained it, I clearly know that what all permutation combinations ICAI has got to do with this. They can give a question worth 5 or 6 marks playing with it. And they have to draft the question very simply. Give a table or column, give all the details like I have given. In simple way, they can give the question and try to calculate interest. Because till now, students are used to calculate interest only on late payment of output tax. But now you have to know the practical side of interest on wrong availment and wrong utilization of ITC. You are prepared for a question which has not been asked till date, and you are prepared for a complicated question which ICAI may make one fine point of time and tell that, okay, this time we are going to give you a surprise. Have this question. Easy only. Once you understand this, actually it is quite simple. Are you guys clear with this understanding? Interest portion of your payment chapter. Now, when you talk about your TDS and TCS, one thing is very clearly known to you. TDS is deducted by whom? TDS is deducted by whom? TDS is deducted by. So when you talk about TDS, it is deducted by government. It is deducted by government. And TCS, your electronic commerce operator. Electronic commerce operator. So you understand in this way. There is a supplier and there is government. TDS. There is a supplier, there is ECO, and there is your recipient. Here government itself is the recipient. Government itself is the. So TDS is when you are supplying to government. Supplying to government. TCS when you are supplying through ECO. Supplying not to ECO. It is supplying through ECO. Through ECO. Supplying to government or government undertakings and supplying through ECO. Supplying through ECO. This government will pay TDS and the supplier will get the TDS amount. ECO will pay TCS and the supplier will get TCS. Government will pay TDS through cash ledger Supplier will get TDS in its cash ledger. Eco will pay TCS through its cash ledger, and supplier will get in its TCS in its cash ledger. And please understand that government may have normal GST number, but for deducting TDS, it will have GST TDS number. So government will have two GST number. One is normal for paying GST on its supplies. One is for deducting TDS. Likewise, electronic commerce operators, say for example Amazon. Amazon will have a normal GST number for paying GST on its commission. And Amazon will have GST TCS number for paying its TCS. For paying its TCS. Are you guys clear with this understanding? Are you guys clear with this understanding? So this is basic outline of your TDS and TCS. TDS and so TDS, which is discussed in your section 51. TCS, which is discussed in your section 52. It is supply to government or government undertakings. Here it is supply through eco. Supply through eco. The basic understanding clear? Now let us quickly walk through the main conditions. There are other things that you have to take care before you decide whether TDS is there and before you decide whether TCS is there. Now, if you are supplying to notified recipient, who are all notified recipient? Either government or government agencies or government undertakings. Government agencies or government undertakings. So your government undertakings will cover public sector undertakings where the control is of government. It will also cover government society which is formed by the government. It will also cover any body or authority or establishment which is run by the government. 51% is controlled by. You need not even remove all these things. Just simple. Government agencies or government controlled undertakings. It may be government company, it may be government society, it may be governmental body or authority. It may be government company, that is public sector undertakings, or government society, or government body or government authority controlled by government. And the main important condition, if the contract value is more than 2.5 lakhs, other than GST and cess, the main basic value, the contract value. For the first time you are using the word contract value, not the transaction value. The contract value should be more than, you are giving the government 3 invoices, 1 lakh, 1 lakh, 1 lakh each, but everything is under one contract. Whether the contract value is more than 2.5 lakhs? Yes. Whether TDS will be applicable? Yes. The contract value is more than 2.5 lakhs. If the contract value is more than 2.5 lakhs. So there are other conditions as well, but slowly we'll discuss. First condition. Recipient is government agencies or government undertaking. Second condition. Contract value is, it is not even more than or equal to. It is not even more than or equal to. It is more than 2.5 lakhs. It is more than 2.5 lakhs. Now, TCS will be collected by ECO if the supply of goods or services is through ECO, condition number 1, and the payment is also routed through ECO. Supply is through ECO, consideration is also routed through. Supply is through ECO, consideration is also routed through ECO. What are the basic 2 criteria for TDS? Supplies to government, contract values more than 2.5 lakhs. Here, supply is through ECO, consideration is also routed through ECO. Consideration is also routed through ECO. Now, other condition for TDS. TDS will not be applicable. Now, government is very intelligent. TDS will not be applicable if both the supplier and the recipient are government agencies and both of them are government agencies, government undertaking. Supplier is also government, recipient is also government. Or supplier is government, recipient is government undertaking. Or supplier is government agency, recipient is government. They telling we are brothers. Why to disturb ourselves? We are all brothers. No. If his third person will disturb it, one villain, other villain. No, we will not fight among ourselves. We'll take care of the hero. So government and government. Sorry, we are out. We are out. If the supplier as well as recipient are government or government agencies or government undertakings, no TDS. No TDS. So first case where there is no TDS. Second case is also very clear. See, here governments want to protect itself. Even in second case, government want to protect itself. If the location of supplier and place of supply is in one state, say Maharashtra. Both location of supplier is a third party, and place of supply is in Maharashtra. But government, who's the recipient? Government is in Bihar. Government is in. Understand the difficulty of the government. In the first case, government is telling that we both are brothers, no TDS. In the second case, again, there is a problem for the government. Why? If I tell location of supplier and place of supply is in the same state, the tax will be CGST plus SGST. But government is located in Bihar. So government cannot deduct TDS because the only TDS it can deduct is IGST because it is located in Bihar. And if it wants to deduct CGST and SGST, it has to get registered in. Government has to get registered in. What are you? Why are you? Why we are that to disturb others? Now by this, if we are ourselves disturbed, it is better not have TDS. Look at these 2 points. You will understand the reality of government. In the first case, why no TDS? Brothers. Supplier is also government. See, recipient should always be government. That's the criteria. But now supplier is also government or government agency or government undertakings. We both are brothers. No TDS. Second case, supplier is a third party. Supplier and place of supply is in one state, say Maharashtra. So it will be CGST plus Maharashtra SGST. But recipient, who's the recipient? Government or government agencies or government undertaking is in Bihar. Now, if it wants to deduct TDS, it can deduct only, but it has to deduct CGST and Maharashtra SGST TDS. How is it possible? It has to go and get registered itself in Maharashtra. The TDS it should be there is CGST SGST, but it is located in Bihar. So it can maximum do only IGST, which is not allowed, which is because the tax type is CGST. And so for government to deduct CGST and SGST TDS in this case, it has to get registered in. Government is telling, I will not do all this work. Better not have any. I can deduct only IGST TDS, which I cannot do because it is CGST SGST. For me to deduct CGST and SGST TDS, I have to get registered in Maharashtra, which I am not ready to do. Therefore, no TDS. Clear? Now, there is no TCS in one case. If the supply is a transaction, supplies of notified services, which is covered under 9(5), where neither supplier will pay tax nor recipient will pay tax, it is ECO who is going to pay tax. When it is ECO who is going to pay tax, there's no question of TCS. Supplier is anyways not affected. So when a transaction is covered in section 9(5), no TCS. See, when it is applicable is seen. When TDS is applicable, recipient is government agencies, government undertakings. Contract value is more than 2.5 lakhs. When it is not applicable, both supplier recipient are government agencies, government undertakings. Or Location of supplier, place of supply in one state, but recipient is in other state. Not workable. Not workable. When TCS is applicable? Supply is through ECO. Payment is also routed through ECO. When TCS is not applicable? If it is notified under section 9.5, because neither supplier will pay tax nor recipient will pay tax, it is ECO is going to pay tax. So on what amount your TCS will be there? So TCS will be there on supply minus supply returns minus 9.5 supplies. So TCS will be on net supplies. If I am supplying through Amazon 1 lakh in this month, 30,000 is returned back. TCS will be on 1 lakh minus 30,000. Supply minus supply return. And why I am removing 9.5? Because 9.5 case is not even covered under TCS. Not even covered under. So TCS is on gross supplies or net supplies. Gross supplies or net supplies. If I supply in the month of September through Amazon is 1 lakh and there will be returns 30,000. TCS will be on 70,000. TCS will be on 1 lakh minus 30,000, 70,000. Why I am removing 9.5? Because 9.5 per se consumption itself is outside TCS. There will be no TCS on section 9.5 supplies because who will pay GST in section 9.5? Neither supplier nor recipient, it will be ECO who will pay GST. Now there are other cases where both TDS and TCS will not be applicable. Now I am taking it commonly. If supplier himself is unregistered, or supplier is registered but it is taxed under RCM, or supplier may be registered, it may be under FCM, but the supply is of exempt goods or services. Supplier is unregistered or RCM case or exempt goods services. No TDS, no TCS. See, in all the three cases, understand. Supplier is unregistered. If supplier is unregistered, he will never get amount in his cash ledger. No TDS, no TCS. Or if supplier is registered, but it is taxed under RCM. It is taxed under RCM. Anyways, he is not bothered. He is not bothered. Recipient will take care. Third, supplier is registered. It may be under FCM, but the supply itself is of the tax on it itself is, when the tax itself is 0, why to have TDS, why to have TCS? Are you guys clear with this understanding? Supplier is unregistered, tax under RCM, or if it is exempt goods or exempt services, no TDS TCS. If I want to put in other ways, when TDS TCS will be there, supplier should be registered, taxable under FCM, and supply should be of taxable goods, taxable services. Then there will be TDS and TCS. What if I tell that supplier is registered, tax under FCM, and it is taxable goods services, but he is registered under composition scheme. Now, whether it's registered under composition scheme or whether it's registered under regular scheme, there will be TDS, there will be TCS. Now, composition scheme is not the criteria. The supply. What are the three criteria for TDS and TCS will be there? Supply should be registered, tax under FCM, and it should be taxable goods or taxable services. Whether the supplier is a regular scheme dealer or a composition scheme dealer, that is not relevant. TDS or TCS will be that. Now, what is the liability? What is the TDS rate and what is the TCS rate? TDS rate is 2%. 1% CGST, 1% SGST, or 2% IGST. Can there be IGST? Yes. There can be IGST. Supplier is in Maharashtra. Place of supply is Bihar. Government is in Bihar. So there will be IGST. Supplier is in Maharashtra. Place of supply is Bihar. So it will be IGST. Government is also in Bihar. Can government deduct IGST TDS? Yes. Supply is of IGST and government is going to deduct IGST TDS. So it's possible. When I tell TDS 2%, what is the meaning? If it is CGST, SGST, 1 plus 1. If it is IGST, 2. What is the TCS rate? TCS rate is maximum rate is 2%, but the applicable rate is 1%. TDS rate itself is 2, but TCS maximum rate is, but for your exams notified applicable rate is 1%. TDS, D is bigger than C, correct? TDS, TCS, because in exam hall you'll be confused when it is 1, when it is 2. So C is smaller than D. So D 2%, C 1%. When I tell 1%, CGST, SGST 0.5, 0.5, IGST 1%, IGST 1%. What is the due date of payment and due date of return filing? What is the due date of payment and due date of return filing? TDS and TCS same. TDS, it is payment and GSTR 7. TCS, it is payment and GSTR 8. What is the due date? 10th of next month. 10th of? If you are making the payment late, what will be the implication? Interest. Late payment will lead to interest. Late filing will lead to late fees. But late fees, make a change. Late fees for TDS is rupees 25 per day of delay or rupees 1000, whichever is lower. Late fees for TDS is 25 per day or rupees 1000, which is lower. This is for CGST. Late fees, copy paste, SGST. For TCS, it is 100 per day of delay or 5000, whichever is lower. For TDS, it is 25 per day of delay or 1000, which is lower. This is CGST late fees, copy paste, SGST late fees. For TCS, it is 100 per day of delay or 5000, which is lower. This is CGST late fees, copy paste, SGST late fees. Are we guys clear with this understanding? This is a basic understanding of your TDS and TCS. Actually, we are done with your TDS and TCS. Now, certain special aspects. The basic understanding of your TDS and TCS. Now, certain special aspects. What are the special aspects? This first special aspect is unnecessary. For TDS, government will give a TDS certificate, GSTR 7A, which will automatically be there on the portal. Not required. Certificate and all is outdated, not required. For TCS, they don't have the concept of certificate. Automatically will get it. See, certificate is not required. Automatically the other party will get it, download it and accept it. It should come. But anyways, if you see the differences, they go with the concept of TDS certificate, but there's no such thing called as TCS certificate. The opposite person will get on his portal. If he accepts it, whether it is TDS or TCS, it will come in his cash ledger. If he is validating the transaction, the amount will come in his cash ledger. But for TDS, they have the concept of certificate. For TCS, there's no need actually. They don't have the concept of certificate. Now, there are certain special aspects in TCS which are not there in TDS. First thing is annual statement. It is very clear, we have already touched upon that electronic commerce operator will file monthly GSTR 8 and annually he will file annual statement. Electronic commerce operator will file annual statement GSTR 9B on or before 31st December of next financial year. Correct? This is already known. Do you have any statement, annual statement by government? Government is refiling GSTR 7 itself is a big headache. Don't tell us to file any annual statement. So government does. No. Third person, electronic commerce operator will file monthly statement GSTR 7 and monthly statement GSTR 8 and annual statement GSTR 9B. Now, whether there will be any matching concept. Yes, there will be a matching concept like a matrimonial website in your TCS. See, whatever outward supplier is going to file in his GSTR 1 or IFF. The same thing electronic commerce operator will file in GSTR 8. Supposing I am supplying through Amazon. I am supplying through Amazon. So I will report in my GSTR1 that these are the supplies made by me through Amazon. Out of my 1 crore sales, I have supplied 10 lakhs to Amazon. I'll report it separately. Amazon will deal with a lot of suppliers, including me. So Amazon will tell that this particular supplier, VJ, has supplied 10 lakhs through me in this particular month. Correct? I will report my outward supplies in GSTR 1. And Amazon will give my outward supplies in GSTR 8. GSTR 8. If it matches, well and good. If it matches, well and good. So, supplier will give details of his outward supplies in GSTR 1. Electronic commerce operator will give the same details in GSTR 8. What are the permutation combinations? I am telling that I have supplied through Amazon 10 lakhs in, say, April month. Amazon is also telling that this supplier has supplied through me 10 lakhs in April month. If it is matching, well and good. So your matrimonial website will give a good result. What if it is not matching? If supplier is telling that I have supplied through Amazon 10 lakhs and Amazon is telling that no, this particular person has supplied through me 2 lakhs. Whether match or mismatch. Whether match or mismatch. Mismatch. Both of them will get a notice. If we rectify our mistakes, no problem. If we don't rectify, government will tell supplier, come here. You're paid lesser output tax. You're paid lesser output tax. Pay the differential output tax. Pay the differential output tax with interest. Clear? So there's one more possibility, sir. Yes, very well. There's one more possibility. I am telling that I have supplied through Amazon 10 lakhs. But Amazon is telling that no, this particular person has supplied only 7 lakhs to me. Whether there's a match or mismatch. There's a match or mismatch. Notice will go to both if we are correcting our mistake. Someone has done a mistake. Well and fine. If mistake is not corrected, now government will disturb the supplier or eco. Supplier, you have shown extra amount. So government will disturb the eco. Government will tell eco, you have short deducted TDS. So pay the differential TDS with, see, from the supplier, government will ask differential output tax. From the eco, government will ask differential, sorry, TCS, not TDS, it is differential TCS with interest. Government is government. Government does not leave any opportunity. The moment government sees an opportunity, it attacks. Right? So that'll be matching concept. So in simple language, that's matching. It's all detailed version. In simple language, that'll be matching. If there is a mismatch, what will happen? You know. If there's a mismatch, what all will happen? We have discussed. Now finally, when I'm supplying my goods through Amazon or supplying my services through an electronic commerce operator, specifically when I'm supplying my goods through, see, I can supply goods or services through eco. Now the last point is only dealing with goods because I'm storing my goods. Services are not stored, goods are being stored. If I'm supplying my goods to Amazon, don't you think that my goods will be stocked in Amazon warehouse? My goods will be stored in? Highly possible, right? If I'm supplying through Amazon, I can supply from my own shop. I can pack and sell and send it. But at times, I may store the goods in Amazon's warehouse. When I'm storing the goods in Amazon warehouse, understand that that is my additional base of business. In my registration certificate, I would have added Amazon warehouse as my additional place of business. Additional place of business. When that happens, government is taking an action against me. So government is doing some inspection or investigation activity against the supplier. Say we supposing it is taking action against me, my company, VJ Limited. Now government is asking, what is your stock? I tell my stock is 10 crores. Government is taking physical verification of my stock and it tells it is only 9 crore. I tell 9 crore is in my place. 1 crore is in Amazon warehouse, which I have added into my Additional presupposes. Can government go and check Amazon's warehouse? Yes. Now, I have given a context outline. Now read this point. Officer not lower than the rank of deputy commissioner. Higher officers. Officer having rank of DC, deputy commissioner, higher officers will give a notice to ECO, electronic commerce operator, asking to information. What are the supplies made by VJ Limited through you? It will match. I will tell that I have made so much supplies to Amazon. It will ask Amazon, tell us what all supplies VJ Limited made through you. Give us the list. We'll match both. We'll match both. Also, it will ask what is the stock of VJ Limited, which is there in your godown. Because I said that my total stock is 10 crores, out of which 9 crores is in my place, 1 crore is in Amazon house. When government departmental officer goes and verifies that only 80 lakhs is available, I am not able to give the reconciliation of 20 lakhs. So it will take action accordingly. Are you clear with this understanding? So it is third party verification. In simple language, in your audit language, it is nothing but third party verification. External party confirmation. External party. So action is taken against VJ Limited, but external confirmation is taken against ECO. External confirmation is taken from ECO. And ECO has to give these details. Whatever details is being asked, ECO has to give these details within 15 days. If not, there will be penalty against ECO. 25,000 CGST plus 25,000 SCST. ECO has to cooperate. Whatever details is asked by deputy commissioner or higher officer, ECO has to give these. Only two information will be asked. What are the supplies made by the supplier through you? And what is the stock of this supplier at your warehouse? You have to give this information within 15 days. If not, officer can put penalty against ECO for not sharing the information. CGST 25,000, SGST 25,000. Are we guys clear with this entire concept of TDS and TCS? Are we guys clear with this entire concept of TDS and TCS? Is it clear? Is it clear? That's everything about your GST TDS. Call it as GST TDS and GST TDS so that you do not confuse it with your income tax TDS and income tax TDS. They are very different. Method is the same, but they are very, very different. Now, when you talk about return filing chapters, there are different persons filing different returns. Different persons filing different returns. Now, first to understand different persons filing different returns, you need to understand what are the different types of persons and what are the returns that they file. So, you have regular taxable person, casual taxable person. Casual taxable person will come along with regular taxable person. Then you have composition taxable person, composition scheme. Then you have non-resident taxable person, NRTP. NRTP. Then you have your online information and database access and retrieval services, online money gaming. These are all online services sitting outside India, where the supplier is outside India. Where the supplier is outside India, non-taxable territory, and the recipient is in India. The recipient is in India, right? So you have these people, these special people. Then you have these normal people. Then you have certain special people. Then you have certain special people, and these special people are TDS deductor. Rather, starting with your special people are input service distributor. Input service distributor. They take the credit, pass on the credit. Head office of a company takes the credit, passes it to its branches. Head office will take the credit, pass to its branches for the common input services. Then you have TDS deductor and TCS collector. TDS deductor and TCS collector. So the main category is these people. They are all other special categories, right? You can tell them these people as tax payers, and these people are tax distributors or tax deductors or tax collectors, right? What are the normal returns that they file? All these people will file returns, correct? All these people are going to file the returns. What are the normal returns that they are going to file? When you talk about regular taxable person, casual taxable person, RTP, CTP, RTP and CTP, what is the normal return that they file? Normal return that they file. It is normal return that these people will file as GSTR1 or IFF, which is mini GSTR1. Italy, mini Italy. So GSTR1 is Italy. Mini Italy is IFF. It's nothing but GSTR1. Invoice furnishing facility. Invoice. So I'm not writing GSTR. I'm just writing one. Right? Or IFF is invoice furnishing facility. You can always remember it as Italy and mini Italy. It is nothing but GSTR1, but a different thing. We'll understand it when you saying QRMB scheme. GSTR1 or IFF plus GSTR3B. GSTR3B. Composition taxable person. CMP08 is quarterly payment plus GSTR 4. GSTR 4. NRTP. GSTR 5. OIDRS. GSTR 5A. GSTR 5A. ISD. GSTR 6. TDS. GSTR 7. TCS. GSTR 8. GSTR 8. Clear? Now, when you talk about these normal people, how they make the payment? This is all the return types. Payment and return filing. Payment here is monthly payment, monthly return, or monthly payment, quarterly return. Return can be monthly or quarterly, but payment is always monthly. Payment is always QRMB scheme. Quarterly payment, yearly return. Yearly return. Quarterly payment, yearly return. NRTP, monthly payment, monthly return. Monthly payment, monthly return. OIDRS, monthly payment, monthly return. Monthly payment, monthly return. ISD, there is no payment, monthly return. There is no payment, monthly return. TDS, monthly payment, monthly return. TCS, monthly payment, monthly return. There are only two places where payment and return filing frequency is different. One is regular taxable person, casual taxable person, when you're talking about QRMB scheme. That is monthly payment, quarterly return. And composition taxable person, quarterly payment, yearly return. All other places, due date of return filing is equal to due date of payment. Same. Except for these two cases, all other places, whatever is due date of return filing is due date of payment. Due date of payment. Same. Clear? And there is one place where there will be no payment. What is that? ISD. Take the credit, pass the credit. Take the credit, pass the credit. Take the credit, pass the credit. No payment. No payment. These are all your normal returns. Normal returns. Now what about special returns? What about special returns? Special returns. Now there are two special returns which are there. One is 9 and one is 10. 9 is all same thing. One is annual return and one is final return. Annual return is 9, 9A, 9B, and final return is 10. One is annual return. One is final return. Annual return will be filed only by one regular taxable person. One is regular taxable person. Only regular taxable person. Casual taxable person is not there. Only and only regular taxable person. One composition taxable person. And one TCS collector. TDS will be deducted by government. TCS will be collected by electronic commerce operator. ISD is nothing but your head office, correct? Head office taking the credit, passing on the credit. ISD is take the credit, pass on the credit. TDS deduction is by whom? Government or government companies. Here government companies will also come. We'll see that in TDS. TCS is by electronic commerce operator through whom we are supplying the goods or services. ECO, online platforms, electronic commerce operators. So one which is filed by regular taxable person is GSTR 9. One which is filed by composition taxable person 9A, ghost. No one has ever seen it till date. Ghost. No one has ever, theoretically there, but practically no one has ever seen it. GSTR 9A. And electronic commerce operator collecting TCS will file 9B. 9, 9A, 9B. 9, 9A, 9B. There's something called as 9C, that is different. 9, 9A, 9B. 9, 9A. Final return. Your final return is required to be filed. Your final return is required to be filed only and only by RTP and CTP, regular taxable person and casual taxable person. Not by composition taxable person, not by NRTP, even not by OIDRS or OMG, because they will not have stock. So your GSTR 10, your GSTR 10 is actually filed by whom? Only two persons, RTP and CTP, regular taxable person and casual taxable person. Regular taxable person and casual taxable person. So this gives you a very clear picture of all the returns, right? 1 IFF plus 3B, then CMB 08, GSTR 4, 5, 5A, 6, 7, 8. Annual return 9, 9A, 9B. Final return 10. This gives you a very clear picture of all the types of returns. All the types of your returns. Are you guys clear with this understanding? And you have a very clear idea of whom we are talking about. Annual return is filed by whom? Only whom? 3 people. No CTP. RTP, GSTR 9. No CTP. So your annual return is not filed by CTP. It's only by RTP, GSTR 9. Composition taxable person 9A. TCS collector 9B. And your final return is filed only by RTP and CTP. GSTR 10. GSTR 10. One time return. When you cancel it, you'll be having one time return, which is your final return. Now, if you talk about all the returns due dates, actually what is left out is due dates. What is actually left out is only due dates. So one by one we'll see the due dates. First we'll talk about whom? RTP and CTP. You have two schemes. You do have two schemes. One is MRMP scheme. One is QRMP scheme. One is MRMP, one is QRMP. MRMP and QRMP. When you talk about MRMP scheme, understand that first you will file your outward supply details. IFF, GSTR 1, payment and 3B. IFF, GSTR1, payment and 3B. Payment and 3B. Let us take a particular month, particular quarter rather. April, May and June. April, May and June, and try to understand the due dates. What will be the due dates? Now, if you are under MRMP scheme, it is monthly payment, monthly return. Though the name is MRMP, but you have to call it as monthly payment, monthly return. QRMP is the name, quarterly return, monthly payment, but the right way to call it as monthly payment, quarterly return. Now, first you will file your outward supply details. IFF and one will contain only outward supply details, only the sale details. If you are under MRMP scheme, there won't be any IFF. There will be only GSTR1. For April month, 11th of May. Payment and 3B, same due date. 20th of, after making the payment only you can file 3B. Without payment you cannot file your GSTR 3B. Right. Next, May month, same thing. Same thing, May month. What will be the answer? Same thing. What will be the answer? No IFF. May month, GSTR 1, 11th of June. Payment and 3B, 20th of June. June month, no IFF. GSTR 1, 11th of July. Payment and 3B, 20th of July. So which means GSTR 1 is 11th of next month and payment in 3B is 20th of next month. Simple. But this, if this was simple, I would not have given in month by month, because you have to understand QRMP scheme. You have to understand QRMP scheme. In QRMP scheme, in April month, you'll have minutely. You'll not have weekly, you'll have. So you'll not have GSTR 1 because return is quarterly. So you'll have GSTR 1, but wait, due date is also changing. 13th of May. 2 days extra. 13th of May. So no GSTR 1. No GSTR 1. Your payment will be there? Yes. Payment is monthly. So you'll be having payment, but wait, 5 days extra. 25th of May. Instead of weekly, you'll have minutely. GSTR 1 is not there, IFF is there, invoice furnishing facility. Due date is 2 days extra, 13th of May. You'll have payment, but 5 days extra. It's not 20th of May, it is 25th of May. 3B? No, quarterly. Now answer for May month. You'll have weekly or minutely? May month, 13th of June, IFF. No GSTR 1. Payment will be there? Yes. 25th of June. But 3B will not be there quarterly. When you go into the last quarter, then will you have Italy or minutely? Now you'll have Italy, and for the entire quarter. Whatever you have reported in IFF will not be reported in one. If you have not reported in IFF, if you have not filed IFF, everything will be reported in one. So whatever is missed out in April, May will come here. Because IFF is optional. Minutely is optional. You want have minutely. If you don't want, don't have minutely. But GSTR 1 is mandatory. 1 is mandatory. So what is the due date? 13th of July. It's not for that month, it is for the entire quarter. It's for the entire quarter. Now, payment and 3B will be there for the entire quarter. Entire quarter together. Right. After payment, there will be 3B. The due date is 22nd or 24th of July. When you talk about southern part of India, 22nd, more disciplined. And northern part of India, 24th, bit lazy. They expected that this scheme is going to be very hit, very famous. Like Prabhas always thought that after Bahubali, all movies will be super duper hit. The only person who to watch his movie in theater was himself. Right. So expectation of QRMP scheme when government launched it, they were so proud. As if they have created something superb. But when we see QRMP scheme, it is Daba scheme, waste scheme, unwanted scheme. Quite sure. You might call me as astrologer, but quite sure. After a few years, it will be removed. Quite sure. It's just a matter of time. Few years it will be removed. No one is. See, a simplified scheme for small people means it should be actually simple. What if I tell that it's so complicated that to understand itself, these small players will find it difficult? What I'll do? I'll go for this normal scheme. You're telling me quarterly payment, you're bringing minutely, then you're bringing Italy, you're telling if you want minutely, you have it. If you don't want, don't have it. We'll take care in Italy and payment again, you give me different dates. But when you're making written filing is quarterly, but anyways, I have to make the payment. So when you're asking payment, now again I quarter and I have to do double check whether I've made the payment properly or not. I'll ignore it. I'll go forget the complications involved. Life was very simple. Life was very, very simple in MRMP scheme. Government thought that excellent scheme, so hit scheme. Many people will opt it. When many people are opting it, portal will be very busy. So what to do? Give two dates. One for southern part of India, 22nd of next month after the end of the quarter, which means 22nd July. One for the northern part of India, 24th of next month after the quarter, which means after the quarter is over, 24th of July. Unwanted scheme. Utter nonsense. If at all there is anything which is nonsensical in GST law, this is a classic example. Waste of time, waste of efforts, even waste of students' time reading the scheme. Right. Very unwanted scheme, but questions may come so that you should know the due dates. These are all the due dates of your QRMP scheme. So when you're talking about the due dates, it's quite simple. Quite simple to know the due dates of your MRMP scheme and QRMP scheme. Are you guys clear with the due dates? Now you know why we are calling it as Italy and mini Italy. IFF and GSTR1 has got only one details. Give the details of invoices, sales invoices, outward supplies details. Outward supplies details. As a replacement of GSTR1 for the first 2 months, you have IFF. You have IFF. Are we guys clear with this understanding? Are we guys clear with this understanding? It's all about your due dates of your RTP and CTP. RTP and CTP. Now, when you're talking about your composition scheme, I mean, quite simple. What will be the due date? Composition scheme. Composition taxable person. April to June, July to September, October to December, Jan to March. Payment is quarterly. Written filing is yearly. So what will happen? April to June, 18 days they give for payment. Payment is there in which form? CMP 08. Yearly return is GSTR 4. April to June, 18th July. July to September, 18th October. October to December, 18th Jan. Jan to March, 18th April. After the entire year is over, you will file yearly return. After the year is over, 30 days, which is 30th April of next financial year. 30th April of next financial year. Clear? Clear? Payment is after the end of the quarter, 18 days. Yearly return is after the end of the year, 30 days. And we have taken an example to understand how it actually works out. How it actually works out. That's everything about your composition taxable person. Composition taxable person. NRTP. NRTP is very special. It is 13th of next month or 7 days from the last date of registration certificate, whichever is earlier. 13th of next month. 13th of next month or 7 days after the end of the registration certificate, whichever is earlier. Both for payment as well as written filing. So we are seeing the due date of payment as well as written filing. Payment and written filing due dates are exactly the same in all the cases. There are only two exceptions, and both the exceptions we have seen. One exception is QRMPs for regular taxable person and casual taxable person. Other exception is, other than that, whatever is the due date of return filing is the due date of payment. Both are the same. Now, NRTP and CTP. What is common point in NRTP and CTP? Temporary registration. They come for temporary point and they give temporary registration. The one fact which is true for CTP and NRTP, though CTP does not comes with NRTP, but that's one fact which is true. They are going to get temporary registration because we are talking about a person going to business exhibition or a trade fair in a state, will participate in business exhibition, trade fair in a state. After that is over, he'll come back. So he's going to that state permanently or temporarily? Temporarily. This is all temporary registration. Assume that that business exhibition or trade fair in that state, say for example in the state of Maharashtra, starts at 1st April and it is going to end at say 20th of May. Generally the validity of the registration will be starting from 1st April to 20th May. Rather, I'll make a change here for one reason. So 20th May, I'll write say 5th of June. 5th of June. Normally, the validity cannot go beyond 90 days. The validity cannot go beyond, and if they want extension, they can get extension for another 90 days. So temporary. Temporary means it cannot be more than, and don't think that validity is 90 days. No, it is 90 days or the last date, whichever is earlier. In this case, where 90 days is not over. In this case, 90 days is, but validity is over on 5th of June because exhibition itself gets over on 5th of June. So maximum validity is 90 days. Validity, don't tell validity is 90. Maximum validity is, it should be less than or equal to 90 days. Max validity that they can give is 90 days. So this is the validity of registration. Now, so we were talking about NRTP, but why suddenly you brought CTP? To make you understand the difference. Both these people will file return for April, May and June. Correct? Both these people will file return for April, May and June. But your CTP will file 1 payment plus 3B. I'm ignoring QRMP scheme. I'm assuming that this CTP has not gone for this nonsense scheme, QRMP scheme. And NRTP will have only payment and GSTR 5. What is the due date for CTP? April month, we have already discussed. GSTR 1, what is the due date? April, 11th May. May, 11th June. June for GSTR 1. For GSTR 1. What about your GSTR 3B? What about your GSTR 3B? Payment and 3B, April month, 20th of May. May month, 20th of June. June month. Clear? What about NRTP? What about NRTP? What about NRTP? 13th of next month is 13th of May. Or what is 7 days from the last date of registration? Last date of registration is June 5. So 7 days will be clear. So 13th May or 12th June, which is earlier? Second case, 13th June or 12th June, which is earlier now? Third case, or 12th June, which is earlier? Now, if I would have said this statement, believe me, 100 out of 100 students would have said no. Can there be same due date for 2 months? Before this, for 2 months, can there be same due date? So normal feeling will be for 2 months return, there cannot be the same due date normally, but there's a possibility. For whom? NRTP. There's a possibility. Not always. There's a possibility for NRTP where given the data, your May month return, there will be 2 returns filed, mind you. You will not file a single return. You will file May return separately. You will file for May month also the due date is 12 June, and for June month also it is, because I have drafted the question in such a way. I have drafted the question in such a way that you get the same answer. If I change the last date of validity to 10th of June, 10th of June, for May month it would have been 13th of June, and for June month it would have been 17th of June. It would have been different. There is a possibility. It is not that always don't think that NRTP means last 2 returns will be the same. That's a possibility. It's not always, there's a possibility. So in this question, your May return, May GSTR 5, due date 12 June, June GSTR 5 and payment due date 12 June. Will you file single return May and June or 2 different returns? May return will be a separate return, June return will be a, but due date will be the same. Due date will be the same. How you get the same data? Because what is the due date, by the way? 13th of next month or 7 days from the last date of registration, whichever is earlier. Whichever is earlier. Are you guys clear with this understanding? Are you guys clear with this understanding? Now, that is the reason I took compared. Conceptually, CTP and NRTP means the same. But temporary registration. The difference is CTP is a person belonging to India. I am in Tamil Nadu. I am going for business exhibition in Maharashtra. I am regular taxable person in Tamil Nadu, but casual taxable person in Tamil Nadu I am but in Maharashtra I am a casual taxable person. Trump comes from USA to Maharashtra for business exhibition. He is not having any presence in India. He is NRTP. I'm telling the difference between CTP and NRTP. I'm actually telling the definition itself. Occasionally we are coming. Occasionally I am also going to Maharashtra. Occasionally Trump is also coming to Maharashtra. Occasionally means temporary purposes. Right? The difference is I don't have place of business in Maharashtra. In that state. I do have place of business in Tamil Nadu. In Tamil Nadu I am a regular taxable person. In Maharashtra I am casual taxable person. Whereas Trump is not having any place of business or even residence throughout India. Trump is not having any place of business or residence not only in Maharashtra, throughout India. So when he is taking registration in Maharashtra, he will register as NRTP. He will register as NRTP. When I am going to Maharashtra from Tamil Nadu, I will register as, so CTP means I am regular taxable person in one state. In that state I am CTP. NRTP means he is not even registered in India. Directly in Maharashtra he is registering as NRTP. And one common point, both CTP and NRTP will not file annual return. No GSTR 9. No GSTR 9. One differentiating point, CTP will file final return GSTR 10, whereas NRTP will not file final return GSTR 10. Common point is both of them will not file annual return, but CTP will file final return, NRTP will not file final return. NRTP will not file final return. So that's about your NRTP return compared with your CTP return. So comparison will give you more clear picture. Are you guys clear with this understanding? Are you guys clear with this understanding? So that's about your NRTP return. OIDRS from outside India, online money gaming from outside India. Suppliers are sitting outside India. See, online information and database access and data services is an online services, automated online services, and the supplier is sitting outside India. Online money gaming is also automated online services, but it involves money gaming. Technically speaking, OIDRS is wide enough to cover OMG. But now the definition of OIDRS removes online money gaming because there are some slight differences in both. Slight differences. But as far as return filing, both are the same. Both are the same. What will happen? When the supplier is outside India, recipient is India, normally it is import of services. And normally import of services, it is RCM. Normally import of service, it is recipient will pay. Correct? But OIDRS services from outside India, OMG services from outside India, tax will be that, but no RCM. Supplier outside India will pay. Supplier outside India will pay. Supplier who's sitting outside India will pay. When I'm telling supplier outside India will pay, what it means? You're talking about a foreign company making payment of GST in India, correct? You're talking about a foreign company making payment of GST in India. So they have a simplified return. They have a simplified return called as GSTR 5A. GSTR 5A. And due date is very simple. Simplified return. We're talking about whom? OIDARS services or OMG services from a person sitting outside India. Very simplified return. Very basic and simplified return. April month, May month, June month. On or before 20th of next month. So April month, payment and 5A, 20th of May. May month, payment and GSTR 5A, 20th of June. June month, the only thing that you need to understand it is a very simplified return. Very simple. For them, registration is simple. Return filing is a simple form. Return filing is a simple form. They are asked to pay taxes though they are sitting outside India. They are asked to pay taxes though they are sitting outside India. So they give them a simplified return, 5A. B2C transaction will be there. They can give consolidated. This month, how much revenue you got from India? B2C transactions. B2B will not be there. B2C transactions. It will be B2C transactions. B2B means RCM. It will be only B2C transactions. B2C transactions. You're talking about a person sitting outside India required to pay tax under FCM. So you're asking him to pay tax. So it should be a simplified return. One-liner return will be that. A simplified return will be there for them. And due date is simple. 20th of next month, 20th of next month, 20th of next month. And when due date is there, it's not only for return, but also for payment. So payment and GSTR 5A, same due date. Same due date. Same due date. So that is all about your GSTR 5A. Now, your normal returns are all over. Special returns. What are the special returns? ISD, TDS and TCS. ISD, TDS and TCS. I'll tell in a very simple way. What is the difference between ISD, TDS and TCS? In ISD, there will be no payment but return. Head office will give the credit to branch office. Whether it will make any payment? No payment. There won't be any payment, directly return. TDS and TCS? Payment and return. Payment and... So for ISD, when you see your ISD return, ISD GSTR 6, due date of GSTR 6 is 13th of next month. There will be only return. There won't be any payment. There won't be any. So payment you will find not applicable. Payment you will find. But whereas for TDS and TCS, when you're talking about TDS and TCS, GSTR 7 and GSTR 8, there will be payment and return. Payment and the due date is 10th of next month. 10th of. And there's one more technical difference. When head office is giving the credit to branch offices, the branch office, the opposite person, the branch office will get that amount in electronic credit ledger. The opposite party. If I am the head office giving the credit to branch office, I'll take the credit, pass on the credit. That credit will go and sit in your electronic credit ledger. But when you talk about your TDS and TCS, government will pay TDS, ECO will pay TCS. Government will pay TDS against the supplier, ECO will pay TCS against the supplier. The opposite person will get that amount in cash ledger. The opposite person will get that amount in cash ledger. Right. Head office will give credit to branch office. No payment, only distribution of credit. Due date 13th of next month. April 13th May. May 13th June. June 13th July. So on. And the branch office will get that amount in electronic credit ledger. TDS, TCS, payment and return. Payment and return. 10th of next month. 10th of April month, 10th May. May month, 10th June. June month, 10th July. So on. Payment and return. You have to make the payment and then the return will be filed. TDS will be paid and return will be filed by government. TCS by electronic commerce operator. Payment and return by electronic commerce operator, like online platforms, Amazon, Flipkarts, lot of the online platforms, Make My Trip, all these online platforms, if the conditions are satisfied. Not all the online platforms, but the conditions are satisfied. Conditions are satisfied. Now, when that is happening, what will happen? What will happen? So you have the opposite party will get in cash ledger. They will pay by cash ledger. The opposite person will get in cash ledger. Will get in cash ledger. Right. So if at all TDS is deducted by government against me, government will pay by cash ledger. I'll also get in my cash ledger. If electronic commerce operator collects TCS against me because I am registered on Amazon website and I am selling my goods to Amazon, Amazon will pay TCS by cash ledger. I'll also get that in my cash ledger. It is just like your advance tax. It is just like my advance tax is being paid by other person. It is just like your income tax, TDS, TCS. Someone else pays TDS and TCS for you. You will get in your 26 As. You will get in your same way. There are two ways of getting amount in my cash ledger. One, I pay in my cash ledger. It is nothing but advance tax of income tax. When other persons are paying in my cash ledger, it is nothing but just like your TDS and TCS of income tax. Same way, it is GST, TDS, GST, TCS. Income tax, TDS, income tax, TCS are different things. GST, TDS, GST, TCS are different things. But working of it is the same. How it works is the same. When it is applicable, it's different. When will your income tax TDS applicable? When will your income tax TCS applicable? It's very different from your GST, TDS and GST, TCS. But functioning of it is the same. Are you guys clear with this understanding? TDS, TCS, ISD, TDS and TCS. ISD, TDS and TCS. Now, what are your special returns now? Annual return and final return. Annual return and final return. Now, when you talk about your annual return and final return, annual returns are filed by whom? Three people. RTP, no CTP. RTP, GSTR 9. Composition taxable person 9A. Electronic commerce operator who files TCS, who pays TCS, GSTR 9B. In all the three cases, the due date is the same, 31st December of next financial year. You get 9 months. After the financial year is over, you get. So when you're talking about financial year 24-25 getting over, it will be 31st December 2025. 25-26 getting over. It will be 31st December 2026. It is 31st December of succeeding financial year. 31st December of succeeding financial year. And please understand that there is no payment which is required. No payment. No payment. Annual return does not mandate you to make the payment. No, sir, we are all filing annual returns in our office. We are asking clients to make the payment and all. That is optional. Even without making the payment, you can file annual return. Payment is not mandated. There's no due date and all. If you don't pay, they will collect it with interest. Now, if you pay it, you will pay with less interest. If they collect it later, they will collect with more interest. So the due date is only for annual return. The due date is only for, so there is no payment mandated. You can pay it if at all you have any dues voluntarily with interest, but there's no mandation. There's no mandation by the government. They give only the due date of return. Now 9A, 9B, we already discussed. Due date is also same. That is also very clear. 31st December next financial year. There's something called as 9C. If you're talking about regular taxable person whose aggregate turnover is less than or equal to 5 crores, whose aggregate turnover is more than 5 crores. Aggregate turnover is pan India. 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 Don't miss that. Aggregate turnover is pan India. So for supposing your aggregate turnover is there and you're working in 3 states or other 2 states, Tamil Nadu, Maharashtra. Tamil Nadu, Maharashtra. Total of the turnover is more than less than or equal to 5 crores or more than 5 crores. In one case, less than or equal to 5 crores. In another case, more than 5 crores. So, in the first scenario, you have to file GSTR 9 in Tamil Nadu, GSTR 9 in Maharashtra. Separate returns. Because separate registration will be there. But no 9C in Tamil Nadu and Maharashtra. But if your aggregate turnover is more than 5 crores in that financial year, aggregate turnover is pan India turnover. Then in Tamil Nadu, you have to file 9 along with 9C. In Maharashtra, you will file 9 along with 9C is connected to 9. Now, what is 9C? 9C is nothing but reconciliation. Reconciliation statement. Reconciling what? Reconciling your annual return, which is GSTR 9, and annual audited financial statements, which is nothing but your books of accounts. Reconciling the figures. Your GST figures and book figures will not be always the same. So you're talking about reconciliation statement. Reconciling what? Reconciling your GST figures that you have given in GSTR 9. Reconciling your GST figures that you have given in GSTR 9 and book figures that is there in your annual audited financial statement. But that reconciliation is not pan India wise, it is state wise. So your books of accounts should be ready with state figures. Your books of accounts should be ready with state figures. Reconciliation statement. Reconciling what? GST figures, book figures. Technically, you cannot write that. Reconciling the figures of annual return, which is GST figures, and annual audited financial statement, which is your book figures. Are you guys clear with this understanding? And by the way, 9C is self-certified. Earlier it was CA, CMA. Now it is self-certified. It is self-certified, which means both 9 and 9C can be filed by the registered person himself. No need of CA, CMA. Technically, there's no need. They can file on their own. They can file on their only if they understand. They can file on their own, but it's not so easy to understand. If they understand, they can file on their own. There's no need of any other person. So no certification by CA, CMA. It's self-certification. It's self-certification. Are you guys clear? Now, a lot of places you'll find in GSTR, government tells everyone to do that work, but government tells I'm escaping. You all do this work, but sorry, I'm out. So there's a relaxation for government. Government, local authority, that is central government, state government or local authority, if at all their books are subject to audit by statutory auditor or comptroller auditor general of India, CAG. If their books are being subject to auditor by normal statutory auditor or a comptroller and auditor general of India, then no 9, no 9C. No 9, no 9C. So if you talk about relaxation from 9, 9C, one is central government, state government, local authority. One is foreign airline company. And if you look at the relaxation, it's very peculiar. You talk about relaxation for government, it's all with condition. No 9, no 9C, but there's a condition. What is that condition? Your books are subject to audit by a statutory auditor or comptroller auditor general of India. For foreign airline company, again, there is a condition complying with the provisions of Companies Act, plus you produce your statements of receipts and payments, each GSTN wise, each state wise, each GSTN wise, but only for your Indian operations, not for pan India operation, only for your Indian operations, duly certified by a chartered accountant to be given before 30th September of next financial year. So they tell that you comply with the provisions of Companies Act and Companies Rules, plus give your statements of receipts and payments for each of the GST number for Indian operations, not for worldwide operations, only for your Indian operations. Get it duly authenticated or signed by chartered accountant and submit it on or before 30th September next financial year. Then after doing so much, you file 9, but no 9C. Obviously, when you're talking about 9C, we are assuming that aggregate turnover is more than 5 crores. So do relaxation. One, government is government. Government tells I am out. All the rules I have set, but I am going out. No 9, no 9C if my books are subject to audit by statutory auditor or CAG. For foreign and companies, if you satisfy the condition, 9 to be filed, no 9C. No 9C. That's everything about your annual return. Annual return. Now, finally, when you're talking about your final return is at the time of cancellation. Final return is at the time of cancellation. Applicable only for regular taxable person, casual taxable person. Technically applicable for OIDRS, OMG outside India, but practically not applicable. Reason is they will not even have stock. You have to give annual return only if you have stock. They will not have stock. I don't know why they have given here. Final return. They have to give the details of stock which is there. When you're cancelling your registration, if you have stock, you have to give the details. But when you're talking about OIDRS outside India, OMG outside India, they are service provider outside India. Question of stock holding by them is not at all. So I'm removing that. It's all technical parts. For your exam, just remember RTP and CTP. Regular taxable person and casual taxable person. Now, it is at the time of cancellation. So what is the due date for them? The due date for them is 3 months from the date of cancellation, effective date of cancellation or date of order of cancellation. Effective date of cancellation or date of order of cancellation. Effective date can be old. Order can be today's date. Whichever is later, not earlier. You cannot go back and do. Whichever is later. From that order of cancellations, today's I have got order. Effective date is 9 months back. I cannot go 9 months back. So whichever is later plus 3 months. Please understand, when you're filing annual return, there will be payment also. Because on the stock, you have to pay. You have to enjoy the input tax credit. Now you have to pay. Now you are required to pay. If you remember, I said this example, VJ Limited, registered, VJ Limited, unregistered. Both are different person. If there is a stock, that is beam supply. Permanent transfer or disposal of business assets on which ITC has been availed, has been given by VJ Limited, registered to VJ Limited, unregistered. On that stock, you have to pay. Because it is deemed supply. It is deemed supply. Now, when you have to pay, you have to give that details in a final return. In your final return, which is to be filed within 3 months. Order of cancellation or effective date of cancellation, whichever is later. Will it come every month or it will once in a lifetime? It will be once in a lifetime. Once in a lifetime. Right. What details it will contain? Stock details. So whether there will be payment? Yes. There will be payment and return filing. GSTR 10. Now, actually there's a concept called as first return also. First return is also there, but we have not discussed about it. Correct? First return and final return. First return is at the time of new registration or revocation of suspension. In spiritual language, it is at the time of birth and rebirth. Birth and rebirth. New registration and revocation of suspension. Birth and rebirth. Your final return is at the time of only one case. Cancellation of registration. In spiritual language, death. Like Mukti. It is at the time of your death. First return is not any specific return. Here there is a specific return which is called as GSTR 10. Now you will question that then what is first return? Supposing you are getting registered for the first time or there is revocation of suspension. Supposing, assume you are talking about a regular taxable person. He will still file GSTR 1 and GSTR 3B, but it will be for a group of months, for few months together. I am liable for registration in June, but I have got my registration in September. Now, when I am filing my September return, it will be for June, July, August, September. For 4 months together, I will file in the month of September. You got that? I have to pay tax from June month, but I get my registration certificate in. I might have applied on time, but I'm getting my registration certificate in September. Portal will allow me to file only. Portal now will allow to file me only September return, but the September return will contain June, July, August, and September month transactions. So it is a normal return that you file, whether it is GSTR1 or 3B or any such return, but it is for group of months together. Are you clearly understanding it? So which return I'll file? I'll file only September return. I'm going to file only September return, but containing the transactions of June, July, August, September. What is the written form? Normal written form. If I'm a regular taxable person, what is the mine written form? GSTR1, GSTR3B. File only that GSTR1, GSTR3B. Normal. Same returns. So that is not a specific return. Whereas in final return, which is at the time of cancellation, that is a special return where I'll give my stock details and I'll make the payment and file GSTR 10 for my stock. So what if I don't have stock? Even then you have to file it. But tell that there's no stock. Tell that there's no stock. Payment will not be there. But you have to file it. Are you clear with this understanding? Are you guys clear with this understanding? Two major differences. First return, birth, rebirth, new registration, revocation or suspension. Final return, cancellation of registration. Death. First return is a special return or a normal return that you file. So normal return that you file based on who you are. But it is a return for group of months together filed in one return. Filed in 1 month return. But whereas final return, there is a specific return where there will be payment and GSTR 10 for the stock details which is available. Special return is, that's the difference between your first return and final return. And what will be the due date for final return? Due date for your first return, September month. GSTR 1, 11th October. GSTR 3B and payment, 20th October. And what is the due date for your final return? Supposing I get cancellation order on 10th of October, but it is effective from 1st of Jan. Then within how much time I have to file it? 3 months from, not earlier, later. 3 months from 10th October I have to file my final return, which means 10th November, 10th December, 10th Jan is the due date. Not earlier, later. It is not earlier. You don't have Surya watch to go back and do it. It's later. It is, I'll write the dates. Effective date is 10th Jan 2024. You get the order on 10th of October 2024. So it is later of that, 10th Jan 2024. I think in your book it's given us earlier, correct? It's later. In that summary book, it would have given us earlier, it is later. If you see the examples, you'll find it as later. Earlier cannot be there. I'll explain it. If at all you tell earlier, it will be 1st of Jan 2024, which means 3 months will get over on 1st Feb, March, April. You get to know that your registration is cancelled only on 10th October. Can you file your final return on 1st of April? Because 3 months from 1st of Jan is 1st of Feb, 1st of March, 1st of... You cannot go back and change things. Till now, we are not gone into a world of multi-codes where we can go back and change things. No. That's only possible with Doctor Strange changing the permutation possibilities. Not possible, at least with our current capabilities. Yes. It is? Sorry, 10th, yeah, it's not 10th Jan 2024. I'm sorry. Right, it's right. So 3 months from there will be 10th Jan 2025. Yes, correct. 3 months from 10th of October 2024 will be 10th of November 24, 10th of December 24, and 10th of Jan 2025. 3 months from there. Are you guys clear with this understanding? Right. So that is all about your final return. All about your final return. Now there are two more special returns, very special returns. We will call it as very special returns. Normal returns, special returns, very special returns. Very special returns are, one is person having UIN number. Normally people who are registered will have GSTIN number, GST identification number. International bodies, supposing World Trade Organization is having a branch in India, international bodies, World Health Organization, all these international bodies, US diplomats, that will be US Embassy office in India, correct? Every now and then it tries to place with India that don't do this, don't do that, we are against this, we are against that. It will try to enter into all nonsensical things. These international bodies will not have GSTIN, they have UIN, unique identification number. They will file a return called as GSTR 11. GSTR 11. Whether they'll make any payment, they will never ever make any payment. They will only file their return GSTR 11 only if they want to get a refund of tax. They will never pay output tax and they cannot take credit. If you don't pay output tax, you cannot take the credit. But tax on inward supplies, they can apply for refund. Only when they are making refund application, they have to file GST 11. This is the only return where there's no due date. If you want, file it. Rather, government is happy if you don't file it. Why? Because when you're filing GST 11, you're trying to tell that, please give us the refund of tax on inward supplies. These international bodies will not pay any tax on outward supplies. If you don't pay output tax, you cannot get the credit. But for these international bodies, government wants to give benefit. Whatever tax which has been paid on your inward supplies will give you the refund. You apply for refund, will give you the refund. So they'll go for refund of tax on inward supplies. And when they go for refund, they have to file GSTR 11 giving the details of inward supplies. Giving the details of inward supplies. So normally, all the returns have got a due date. Correct? If I were telling the statement, is there any return in GST law which does not have due date? Your answer would have been no. Every return has got a due date. But the fact is, there's one return, GST 11, which does not have a due date. You file it when you want a refund. Or worst scenario, when it is asked by proper officer, which is very rare. When proper officer is asking some details, you file it. Normally, you file it when you want refund. Or if it is asked by proper officer. He is having some doubt, he is asking it. That's a very special case. And even when he's asking, is there any due date? No. When he's asking, give it. When he's asking, give it. Clear? So no payment. Will there be any payment? There's no payment, but return is filed, and that too return is filed not for payment, for getting the refund from the government. For getting the refund from the government. Right? There's no due date. There's no fixed due date. I will not file Jan return, Feb return, March, April, May, June, July, August, September. I want refund. I'll file GSTR 11 along with the refund application. Very special, very peculiar. Likewise, there is one more special return called as ITC 04, which is a return filed by principal when he is making supplies to giving goods to job worker. Job worker, what will have principal will give the goods, get back the goods. Give the goods, get back the goods. Correct? Now that giving the goods, getting back is by way of delivery challan. Delivery, because there's no supply. Give it by DC, return it by DC. DC. Give it by delivery challan, take it by delivery challan. The details of delivery challan will be filed in a return called as ITC 04. Why? How we have to make sure that whatever outward supplies were there with delivery challan has to come back. Otherwise, if you have sent 1 lakh units by way of delivery challan, if you have received only 90,000 units back, you are not able to substantiate 10,000 units. Government will tell that you have supplied it, you have sold it, deemed supply. For that purposes, you have to give details of delivery challan for the goods sent to job worker. Who will file it? Principal or job worker? Who will file it? Principal. It is the headache of principal. It is the headache of principal. Now he will file what return for delivery challan? What has gone out and what has come in? What has gone out and what has come in without tax. Going out without tax, coming inside without tax by way of delivery challan. ITC 04. If you are a small person, if your aggregate turnover is small, if your aggregate turnover is up to 5 crores, small person, then you have to file yearly ITC 04. if your aggregate turnover is up to 5 crores, you're a small person. Then for April to March, entire financial year, you have to file a yearly ITC 04, which is 25th of April of next financial year. If you are a big person, if your aggregate turnover is more than 5 crores, and this aggregate turnover is more than 5 crores, less than 5 crores in previous financial year, because you're checking you're big or small based on previous financial year. Whose turnover you're saying? Principal's turnover, because he is going to file. Then you're a big person. If you're a big person, you will file two ITC 04, April to September and October to March. April to September, 25th of October, October to March, 25th of April of next financial year. Please understand in this way. If you're a small person, they don't want much headache for you. Therefore, they tell that yearly file only one ITC 04, which is 25th of April of next financial year. If you're a big person, aggregate turnover is more than 5 crores in preceding financial year, then your frequency is increased. Now you don't file one ITC 04, you file two ITC 04. April to September, 25th of October of that financial year, October to March, 25th of April of next financial year. 25 days you get time. 25 days you get time. Again here, whether there's any payment here, you are giving the details of outward delivery challan and inward delivery challan. There's no payment. There's no payment. This is only information written. This is purely information written, that how many delivery challan I had sent, how many units I have sent to job worker by way of delivery challan, and how many I have received from the job worker by way of delivery challan. This is only an information written. ITC 04. ITC 04. So you can categorize your returns into normal returns, 1, 3B, 4, 5, 5A. Special returns, 6, 7, 8. Very special returns, 9, 9A, 9B, 10. Very, very, very special returns, GST 11 and ITC 0. Rather, in that chart, we did not only put these places because it was not possible to put in that chart. Very, very special. In that particular chart, if you see, we have put all the different returns except these categories. Are you guys clear with this entire understanding? That is all about your different types of returns. And by the way, we have not only seen the return, we have seen the due date of payment also. Except in two places where due date of payment and due date of return filing is different. What are the two places? RTP, CTP when it is under QRMP scheme, and composition taxable person. Whatever the due date of return filing is the due date of payment. And there are few places where payment will not be there. Like ISD, there is no payment. Input service distributor, there is no payment. Annual return, there is no payment. Annual return, there is no mandation of payment. Your GSTR 11, there is no payment. ITC 04, there is no. In all these cases, payment is not there. So obviously, there cannot be any due date of payment. There is only due date of filing of return. There is no due date of payment. So this completes your different types of returns and their due dates. Now, we'll be seeing about 6 questions and trying to find when what is required. Right, for all the returns together. We have seen different types of returns. Now we'll try to understand these different types of returns in a way that we have a clarity. There are certain questions which needs to be asked for all these 6 different returns. If you see at different places, it will be a mess. If you see at single place, you'll have a clarity. The first question, can you rectify your errors? If there is a mistake or omission, can you rectify it? Yes, rectification is possible. Rectification is possible. There's a time limit. That time limit is 30th November of next financial year or actual date of filing of annual return of that financial year, whichever is earlier. What is the time limit? 30th November of next financial year. For financial year 23-24, what is the time limit? 30th November 2024 or actual date of filing of annual return for 23-24, which will be filing before December, right? Whichever is earlier. Whichever is, if I filed my annual return on 25th October, what is the last date for rectification? What is the last date? 25th October 2024. Why? 30th November 2024 or 25th October 2024, whichever is. And when I tell 25th October, which month's return I can rectify? I cannot rectify it in October month return. I can rectify it in last return is September month return. This date is the date before which you should correct that mistake in your return. So people get confused that if the date is 25th October, if the last date is 25th October 2024 for you to correct your mistake, how you got that? 30th November of next financial year or actual date of filing annual return of that financial year, whichever is earlier. I said that annual return is filed on 25th of October 2024. So whichever is earlier is 25th October. You cannot rectify in October return. You can rectify last in September return to be filed on or before 25th October. To be filed on or before, because October return you can file only in the month of November. October return you can file only in the month of. Are you guys clear with this understanding? Right. What is the last return in which you can correct your mistake, assuming that annual return is filed after 30th of November? Assuming that annual return for that financial year 23-24 is filed after 30th of November. You cannot rectify in November month return, November of next financial year. You can rectify in October return, October of next financial year. That is, in our example, if financial year is 23, if your financial year is 23, 24, what is the last date? What is the last date? 30th November 2024 or actual date of filing of annual return for 23-24. Assuming that I have filed my annual return on 2nd December 2024. I filed it. I had time till 31st December. I filed it. So what will be the last date? What will be the last date? It will be 30th November. When I tell 30th November, it means the last return in which I can correct is October 24 return. For any mistake in financial year 23-24, I can correct in I can correct in next financial year also. Even I can correct in April 24, May 24, June, July, August, September, October. But not beyond October. October return to be filed on or before 30th November. It is not November return. It is October return to be filed on or before 30th November. 30th November. If the last date in our previous example was 25th of October 24, then the last return is not October return, it is September return. Because October return now cannot be filed. October return will open in only November. So September 24 to be filed on or before 25th October. So that is how you have to understand. What is the last date for rectification? 30th November of next financial year or actual date of annual return of that financial year, whichever is earlier. Before that, you should have corrected the mistake in return. You should have corrected the mistake in return. In a portal, you should have corrected your mistake. Right. One more condition. Mistake should be found by you, not by the officer. Mistake should be found by you, not by the. If you have found the mistake, that's the last date. If officer has found out the mistake, you cannot rectify even if there is a time pending. You cannot rectify. What are the two conditions for rectification of errors? Condition number 1, you find out the mistake, not the officer. Condition number 2, when you find out the mistake, you cannot rectify at any point of time. For any mistake committed in a particular financial year, when I tell any mistake committed in a particular financial year, I could have committed that mistake in April 2023 return, or I could have committed that mistake in March 2024 return. Full financial year. I can rectify in the same financial year. I can even rectify in the next financial year, but that's a time limit. 30th November of next financial year or actual date of filing of annual return of that financial year, whichever is earlier. Whichever is earlier. I can rectify my errors in all the types of returns, but rectification is not possible. Your rectification is not possible when you talk about your GSTR 9, 9A, 9B, 10, 11, ITC04. In 10, rectification question itself is invalid because you are going to file only once. So I have not put no, I have written not applicable itself because you are going to file GSTR 10 only once. So in which cases rectification is not possible? 9, 9A, 9B, 10, not at all possible. 11 and ITC 04. ITC 04. In all other cases, it is possible. Second, should I file my last return for filing my current month return? If I am filing May return, should I file April month return? Yes. If I want to file June month return, I should have filed May return. If I want to file July month return, I should have filed June return. If I want to file August month return, I should have filed July return. If I want to file September month return, I should have filed August return. If I want to file October return, I should have done my old work. I cannot start new work without completing my old work. So filing of last return is required in all cases. In all cases except IFF, because IFF is optional. IFF is optional. If I want to file, I'll file it. Mini Italy is optional. If you don't want mini Italy, directly go and have proper Italy at the end of the quarter. So IFF is optional. I can ignore IFF of April month. I can directly file IFF of May month. In June month, there will not be IFF. That will be directly GSTR 1. Correct? Correct. I can ignore April month's IFF. Can I file May month's IFF? Yes. June month, there will not be IFF. IFF is only there in first 2 months. June month, there will be GSTR 1. Whatever is missed out, I will report in GSTR 1. I can ignore April month IFF. I can ignore even May month's IFF. I can directly file quarterly April to June GSTR 1. Right, but can I do it for GSTR 1? No. If it is GSTR 1, first I have to file GSTR 1 of April, then May, then June, then July, so on. So it is not relevant. It is not applicable for IFF, not applicable for TDS, TCS, 9, 9A, 9B, 10, not at all applicable. Why? 10 you will file only once. So there's no question of last return. You are going to file once in lifetime. You're going to file once in lifetime, not a valid question. 11 and ITC 04. So what do you mean by cross mark? Normal rule is, if I want to file my particular return, current period return, I should have filed my previous period return. I should have filed my, but this concept is not applicable in all cases. IFF, as it is optional. TDS, TCS 7 and 8. If I don't have transaction, I will not file it. Supposing in a particular month I don't have transaction, I will not file it. April month I don't have transaction, I will not file it. Directly I will file May. Directly I will file. So I can file May without filing April. TDS, TCS. I can file May month without filing April month. GSTR 9, 9A, 9B. I can file GSTR 9, 9A, 9B of financial year 23-24 without filing for 22-23. 22-23. 10, once in lifetime. So this question is invalid. 11. As I said, there is no due date for GSTR 11. I can ignore April, May, June, July, August, September, October. November month I want refund. I'll directly file November month GSTR 11 without filing any previous period. ITC 04. I can file October to March half yearly ITC 04 without filing April to September. April to September. These are cases I can do. These are all cases I can do. Normally, I cannot do. Without filing previous return, I cannot file my current period return. But these all cases I can do. Next question. Should I file my nil return? Rather, before moving to next question, when I am filing my previous period return, it is not only for one return to another return. There is a return called as 1 and 3B which are interconnected. Which means April 1 and 3B, May 1 and 3B, June 1 and 3B. Actually, I can file May month's GSTR 1 only after filing April month GST1. I can file June month GSTR1 only after filing May month GSTR1. I can file May month GSTR3B only after filing. I can file May month GSTR3B only after filing April 3B. I can file June 3B only after filing. So this is very clear. Filing of previous return is required for filing of. So this is 1 versus 1. 3B versus. But 3B versus 3B. 1 versus 1. 3B versus. But now 1 and 3B are interconnected. They make it more complicated. They tell that I cannot file 3B of April month without filing 1 of April. I cannot file 3B of May without filing 1 of May. I cannot file 3B of June without filing 1 of June. So now it is between 1 and 3B. 1 and, if I want to file 3B of a month, I should have filed 1 of that month. So now it is interconnecting two returns, which is not in other cases. This will be there only for regular taxable person and casual taxable person because they file two returns. It doesn't stop here. Then they create one more story. They tell that I cannot file 1 of May without filing 3B of April. I cannot file 1 of June without filing. And they tell that you buy at all these points. Now this is a khichdi. Khichdi is in front of you. You have this khichdi. How to make this khichdi? Simple. April month 1 3B. Then May month 1 3B. Then June month. Now this khichdi has become simple. Summary of all these 4 points. First start with previous month. April month 1. Then 3B will open. April is over. Then May will open. May month 1. Then 3B of May. Then June will open. June month 1. Then June month 3B. Likewise. Summary of all these 4 complicated provisions different at different places is very simple. So either if you love khichdi, have this khichdi, or forget the khichdi. Make life simple. Make life simple. April month 1, then 3B of April. May month 1, then 3B of May. June month 1, then 3B of June. Simple. Are you guys clear with this understanding? Are you guys clear with this understanding? Also, there are other restrictions only and only with GSTR 1. There are 3 other restrictions only and only dealing with GSTR 1. If you get an intimation that there is a difference between your GSTR 1 and GSTR 3B and your GSTR 3B, if at all there is a difference between GSTR 1 and GSTR 3B, you will get an intimation telling that there is a difference in sales between GSTR 1 and 3B. And when that difference will be there? When your sale in 1 is more than 3B, which means you are paying lesser output tax. Why? In GSTR 1, you will only show sales and tax, but you will not pay. Only while filing 3B, you will make the payment. So in GSTR 1, your sale is 10 crores, but in GSTR 3B, it is only 1 crore. It's only, which means you are actually telling your sales is 10 crores, but you are paying tax only on 1 crore. So they'll give you an intimation. They'll give you an intimation. They'll give you 2 options. Either pay or give reason. Or give, which you have to give within 7 days. If you don't do any of these, you don't pay, you don't give reason, or you are giving reason which is not satisfactory. If you don't do any of these, then the moment you get this intimation, you cannot file your GSTR 1. You will not be allowed to file your GSTR 1 and IFF. When I tell Italy, it is also true with mini Italy. You cannot file GSTR 1. Now you may tell, sir, this restriction is only with GSTR 1. Yes, but understand, if you cannot file GSTR 1, obviously you cannot file GSTR implied. If I cannot file GSTR 1 of April, can I file GSTR 3B of April? So it is implied. So when they tell it, I cannot file GSTR 1 of April month, obviously I cannot even file GSTR 3B of April month. Likewise, they have another point for input. That if I get an intimation under Rule 88D, which is about input tax, my ITC is more in 3B than in 2B. Now I have taken more credit. See, government will have problem only in 2 cases. You pay less output tax. You pay less output tax. Your sale in 1 is more than 3B, or you claim more input tax credit your credit claimed in GSTR 3B is more than what you automatically have in 2B. Government has problem in both. Government tells that for that, this also we can give you an intimation. The moment we give you an intimation, either you have to pay or reply. But the moment they give you this intimation, you cannot file your one on IFF. When you cannot file one or IFF, obviously you cannot even file 3B. But till what time you cannot file? Till you either pay or you reply. After you pay or you reply, this restriction will go away. This restriction will go away. This restriction is still what? The moment you get an intimation, you cannot do anything. But the moment you take action, what is the action that they expect? Either pay, or if you are paying or replying, then this restriction will go away. You can file. You can file. There is one more restriction which is there for only GSTR 1 IFF. Though it is only there for GSTR 1 IFF, it is automatically there for 3B also. If you are not giving your bank account details after you get registration within time given under Rule 10A. After you get registration, you have to update your bank account details within a particular time in GST portal as per Rule 10A. As per Rule 10A, which is 30 days from the date you get your registration certificate or due date of GSTR 1, whichever is earlier. 30 days, no more 45 days. 30 days from the date you get registration certificate or due date of GSTR 1 or IFF, whichever is earlier. If you don't update, you will not be allowed to file. You will not be allowed to file, which means you cannot even file your first return. After your birth, you cannot even file your first return. If you cannot file your GSTR 1 IFF, obviously you cannot file your 3B. Now these restrictions, if I want to put in a simple way, if you get intimation under Rule 88C, more you have paid lesser output tax, or if you get intimation under Rule 88D, you have claimed more input tax credit, or you have not updated your bank account details within time of Rule 10A. Within time of Rule 10A, right? What you cannot do? You cannot file your Italy or Mini-Italy, GSTR 1 or IFF. And if you cannot file GSTR 1 or IFF, obviously you cannot file 3B. Obviously you cannot file 3B. Right? Whether these restrictions will be permanent or timing. If you reply to the intimation under Rule 88C or 88D, you can file your GSTR 1 IFF. Obviously you can file 3B. If you update your bank account details, this restriction is removed. You can file your GSTR 1 or IFF. Obviously you can file your GSTR 3B. GSTR 3B. So that is all about interconnection of returns. Interconnection of, see, one is return to return. 1 versus 1, 3B versus 3B. Then we saw 3B 1, 1 3B. 3B 1, 1 3B. Then we saw not doing something, blocking 1. Not doing something, blocking 1. If your 1 is blocked, automatically your 3B is blocked of that month, automatically 1 of next month is, everything is blocked. If your 1 of April is blocked, you cannot move to 3B of April, you cannot think of 1 of May, you cannot think of 3B of May, everything is blocked. Everything is blocked. You have to take an action. You have to take an action. Now next question, third question. If you don't have transaction, should you file nil return? Normally, repeatedly, basic question, ask question. If you don't have transaction, should you file nil return? Yes. Even if you don't have transaction, how government will know that you don't have any transaction? Only when you are filing your nil return. So you have to require to file nil return. Exception, IFF. No need of nil return. No need of, because it is optional. If you don't have sales in that period, no need of IFF. Moreover, it is optional. Even if I have transaction, I can ignore IFF. I can ignore IFF. So point number 1, if I don't have transaction, I have to file my return. Exception, IFF. No transaction, no need of IFF. GSTR 7, 8. No TDS, no TCS, no need of GSTR 7 and 8. But wait, when you talk about 9, 9A, 9B, even if you don't have transaction, you have to file nil 9, 9A, 9B. Then 10, even if you don't have any stock, You have to file your GSTR 10. You have to file your GSTR 10. So now things are different. It's not the same. For 9, 9A, 9B and 10, even if you don't have transaction, you have to file your 9, 9A, 9B or 10. So this is not true for what? IFF 7, 8, GSTR 11 and ITC 04. See, everywhere answers are different. Everywhere answers are different. Normally, if I tell if you don't have transactions, what will be answer? Should you file your nil return? Loudly, yes or no? If you don't have transaction, should you file your nil return? What are the exceptions? IFF 7, 8, 11, ITC 04. When you don't have transaction, no need to file nil return. No need to file nil return. And there are 3 special cases where you can file nil return by SMS. All other returns, whether it is nil return or normal return, you have to file by portal. There are 3 instances where you can file your nil return by SMS. By SMS. Which is your GSTR 1, GSTR 3B and CMP 08. So what do you mean? Can you file your return by SMS? No. If it is a normal return, written with details, always it has to be filed only by GST portal. Through GST, if it is a nil return, other than these 3 cases, you have to file nil return always by logging onto the portal. Logging onto there are only 3 cases where you can file return by SMS. And that too, condition number 1, it should be nil return. It should be condition number 2. Either you are talking about GSTR 1 or 3B or CMP 08. Normal GSTR 1, file through portal. Normal GSTR 3B, file through portal. Normal CMP 08, file through portal. When you can file 1, 3B on CMP 08 through SMS? Only when it is nil. Only when it is nil. No transactions. Are you guys clear with this understanding? Otherwise, there is only one route open for you. What is that route? Go through portal. Go through portal. You have to go only and only via portal to file your return. All normal returns, when you're filing, file via portal. All nil returns, when you're filing, file via portal. Only 3 nil returns are allowed by SMS. 1, 3B, CMP 08. I have an option either to go through SMS or go through portal. Now, if I am filing my return late, should I pay late fees? If I am filing my return late, if I am making my return file after the due date, there are due dates for return filing. If the return is filed after the due date, should I pay late fees? Yes. If the return is filed after due date, I am required to pay late fees. I am required to pay late fees. There are few cases where late fees is not there. IFF. Because after due date, you cannot even file IFF. After crossing the due date, first of all, IFF is optional. After crossing the due date, you cannot even file IFF. For April month, what is the due date for IFF? 13th May. If you go on portal on 14th May, you cannot even file. So there's no question of any late IFF. You cannot even file late IFFs. Forget about late fees. First. Second, CMP 08. Why? CMP 08 is a payment form. It is not a return filing form. It is quarterly payment. Quarterly. So if I am filing that quarterly payment form late, there will be consequences. But what consequences? Interest. Late payment will attract interest. Late filing will attract late fees. CMP 08 is basically payment form. So there will be interest. There will be interest. Then you don't have late fees for GSTR 11 because you will file only when refund is going to be filed. Correct? GSTR 11, there is no due date first of all. You will file it only when there is a refund application. ITC 04. Technically speaking, ITC 04 should carry late fees. But unfortunately, till date, there is no late fees for ITC 04. Unfortunately. And people are taking undue advantage of it because they don't worry about ITC 04. They file ITC 04 very, very late. Lot of principals who are giving goods to job worker, they file their ITC 04 very, very late, knowing the fact that there is no late fees for ITC 04. See, the other 3 cases are very logical. No late fees for IFF because you cannot file late. No late fees for CMP 08 because there will be interest. No late fees for GST 11 because there is no due date itself. You will file only when you want refund. ITC 04 should carry late fees, but unfortunately it is not having late fees. Unfortunately, it is not having late fees. So what are the 4 cases where there is no late fees? IFF, CMP 08, GST 11 and ITC 04. ITC 04. If you don't file your return, you might get a notice under section 46 telling that please file your return. And once you get that notice, you have to file your return within 15 days. And even after that, you don't file, officer will do best judgment assessment. Officer will start doing his work. See, normally if you don't file your return within due date, late fees and all will start. Notice may not come immediately. Notice may come after 2 months, 3 months, etc. Once you get a notice under section 46, you have to file your return within 15 days. Even after getting notice, even after completing 15 days, if you don't file it, officer will start drastic consequences. You'll have big implications. Officer may start scrutiny or officer may do best judgment assessment, etc. etc. Right. Now, this notice will be given for all the returns, but this notice is not given for your IFF and GSTR1. Government is least bothered about IFF GSTR1. Government is very happy if you don't file IFF GSTR1 because the opposite person will not get in GSTR 2A, GSTR 2B. He cannot get the input tax credit. Government is least bothered. Government is, but obviously if you don't file IFF or GSTR1, you cannot file 3B. Then for 3B, you will get a notice. So government is not bothered about IFF and GSTR1. Government is not bothered about CMP 08 again for the same reason that it is not a written filing form, it is a payment form. It is not a written filing form, but it is a payment form. Government is not bothered about GST 11 because it will be filed by the person having UIN only at the time of refund. Government should be bothered about ITC 04, but for some reason they are not bothered about ITC 04. So this notice under section 46 will not come for what all cases? What all 5 cases? IFF, GSTR 1, CMP 08, GSTR 11, ITC 04. ITC 04. You will not get a notice. Even if you don't file it, you will not get a notice. Even if you don't file it in time, you will not get a notice. And finally, you are not allowed to file your return after filing after 3 years of due date. If 3 years have gone after due date, every return has got a due date. After 3 years of due date, after 3 years of due date, can you file your return? You cannot file any of your return other than GSTR 10, 11, ITC 04. Normally, after 3 years of due date, you cannot file any of your return. Portal will not allow you to file any return after 3 years of due date. After every return has got a different due date, but portal will still allow you to file 3 special returns even after 3 years of due date, even after 4 years, 5 years. What are they? GSTR 10, 11, and ITC 04 and ITC 04. See, one very simple way to understand this: ITC 04 and GSTR 11 are very special. For all the cases, they are like the second main students, which tells that we are not bothered. Whatever you do, we are least bothered. You tell me a rule, I'll not follow that rule. What are the rules I said? Rectification of return? No, I'll not allow it. Filing of previous return mandatory for current return? No. We can file current period return without filing previous period return. Filing of nil return? No, we will not file any nil returns. Late fees? No. For us, no late fees. Notice under section 46? How dare you? You cannot give us any notice under section 46. Filing after 3 years? Yes. Every one of you cannot file your return after 3 years of due date, but 11 and ITC 04 are outstanding students. They tell that whatever rule you set, we will not follow it. You set a standard rule. We will not follow it. Now, why I am telling this? It will be easier for you to focus on other returns. It will be easier for you to focus on other returns. And one interesting point, if you have observed carefully, there is no common question among these 6 questions where the answer is the same. What if you would have to read all these conceptual points and for each of the return? It will not be khichdi. I would rather tell that it will be khichdi, chapati, kurma, everything mixed together given to you. You don't know what you're having. Punjabi dhaba, everything. Punjabi dish, everything together. Idli, sambar, vada, khichdi, chapati, everything together. The reason is these questions will be critical for your MCQs or simple 1 mark or 2 mark questions. If you see it together, you will not find any common answer. You see all the 6 questions. There is not even 2 questions which have standard answer. Everywhere exception is different. Everywhere. So you have to see it at one place. Understand? Okay. There is a standard rule. There are 6 standard rules. There are 6. For all these standard rules, there are certain exceptions. And the exceptions are different for all the rules. The exceptions are different for all the rules. That is all about this particular part of return filing. Now, by the way, what is the late fees? So that will complete here itself. What are the late fees? What is your late fees? So when you're talking about late fees for GSTR 1 and 3B, what is the late fees? No. There is a different late fees for nil return and normal return, correct? Nil return and normal return. You have a different late fees for nil return and normal return. So one of you can open that and help me out. Nil return and normal return. For nil return, if there is no transaction, what are the late fees? What are the late fees? It is per day. Then there is a maximum portion. What are the late fees? It is rupees 10 per day of delay or rupees 250, whichever is lower. Rupees 10 per day of delay or 250, whichever is lower. And whatever late fees we are discussing about CGST late fees. No, CGST late fees, copy paste SGST late fees. So this amount that you are getting, supposing there is 5 days delay. Supposing there is a 5 days delay. See it from institute materials. Supposing that has to be changed. See it from institute materials. So supposing there is a 5 days delay. 50 rupees CGST copy paste, 50 rupees SGST. Normal return, which means no, normal return is based on turnover. Normal return is based on turnover. You have certain turnover limits. If it is up to, if your aggregate turnover is up to 1.5 crores, isn't it? If your aggregate turnover in previous year is up to 1.5 crores or it is more than 1.5 crores, up to 5 crores, or it is more than 5 crores. It is more than 5 crores. And this basically aggregate turnover is of what? Aggregate turnover is of previous year, because you don't know the aggregate turnover current year it is going on. What will be the late fees? What will be the late fees? 1000, 2500, 5000 is okay, but per day there's some different late fees. Rupees 25 per day, right? For CGST. Take out our instrument for CGST. CGST. There will be a master summary chart given in the end. CGST. 25 rupees 25 per day or 1000 rupees 25 per day or 1000, whichever is lower. Then if it is 1.5 crores to 5 crores, it is rupees same 25 per day, same 25 per day or 2500, whichever is lower. If it is more than 5 crores, same 25 per day or 5000, whichever is lower. So if it is a normal return, if there is a 5 days delay, I have to check which category I am falling in. And by the way, it is not only true for GSTR 1, 3B, it is also true for GSTR 4. The only difference is in GSTR 4, you will always be seeing only up to 1.5 crores. 1.5 crores to 5 crores, 5 crores above will not come, because if you are under composition scheme, your previous year aggregate turnover will be always less than 1.5 crores. So you don't read it separately. You don't try to read it separately. So what is the late fees in normal return? You have to see which category you are. Very small, small, small. Up to your aggregate turnover previous year is up to 1.5 crores. Then it is 25 per day or 1000, whichever is lower. By the way, this answer is for CGST. Copy paste SGST. If your previous year aggregate turnover is up to more than 1.5 crores but up to 5 crores, rupees 25 per day of delay, you will find the delay. Due date to actual date is the number of days of delay, or 2500, whichever is lower, not higher, whichever is lower. Copy paste for, if you get 2000, this is the answer for CGST. Copy paste for SGST. If it is more than 5 crores, your previous year aggregate turnover, then rupees 25 per day, or when I tell rupees 25 per day of delay or rupees 10 per day of delay in case of nil return, it is per day of delay, or the last category, normal return, your aggregate turnover in previous year is more than 5 crores, rupees 25 per day of delay or 5000, whichever is lower. This answer is for CGST. Copy paste. This is for 1, 3B and 4. 1, 3B and 4. Why I have not written for CMP 08? Because CMP 08 there will not be any late fees, there will be interest. I have not written for IFF because IFF is optional and after due date I cannot file it. Now there is a special return called as GSTR 7. Government sets the rule for everyone in India. The government tells, I have a separate set of rules. Who will file GSTR 7? Government. Who directs TDS? Government. Government tells, please, give me some relaxation. For them, what is the late fees? Rupees 25, right? CGST is 25 per day of delay or 1000. This 2000 will be CGST, SGST together. If you see 1000, it's only CGST. Copy paste SGST. Whatever you get answer here, whichever is lower. This is answer for CGST late fees. Copy paste SGST late fees. Now government tells, please give me some relaxation. See, per day fees they reduce 25 per, and whether it is nil return, normal return, answer is the same. Now no differentiation between nil return and normal return. Whether it is nil or normal. By the way, they will not file nil return. GSTR 7 nil return is not required. So it will be obviously for normal return. Rupees 25 per day of delay or 1000, whichever is lower. Copy paste. This is for CGST late fees. Copy paste for SGST late fees. No, then in that case, this would be 50 per day. Okay. No. This first tell me, is 50 rupees both together for CGST, SGST? then it is actually 1000 only. So that's a mistake. It's only 1000 for one category. 1000 for one category. Okay, what is the answer for 1, 3B and 4? You check 1, 3B and 4 normal category. What they have written, rupees 25 per day or 1000? No, what they have written. If it is 50 per day, that they have mentioned as 2000, right? And in that other TDS case, no, that 1000 is alone for CGST. 1000 is alone for, very clearly that 1000 is alone for CGST. You can refer the main discussion. The summary discussion, if you are referring, you can refer the main discussion. It is only for CGST. Copy paste will be for SGST. Copy paste will be for SGST. Now, what are the other returns that you have? Other returns, other than all these returns, other returns that you have. GSTR 5, GSTR 5A, GSTR 5, GSTR 5A, GSTR 6, GSTR 6, GSTR 8, 9A will be separate because 9A has got a separate late fees. So 9A I'll write it as separate. 9B will come here. 9B will come here. And GSTR 10. In all these cases, the late fees is rupees 100 per day of delay or rupees 5000, whichever is lower. This is CGST late fees. Copy paste, SGST late fees. Copy paste, SGST late fees. Rupees 100 per day of delay or 5000, whichever is lower. Whether nil return or normal return, no differentiation. No differentiation. Rupees 100 per day of delay or 5000, whichever is lower. This is for CGST. Copy paste, SGST. And finally, for your annual return, 9B is not going to come here. 9B is going to come under normal category. 9 and 9A comes under last category because technically 9 and 9A are called as annual return. 9B is called as annual statement. If you see the section, it is drafted in such a way that 9B will come in the previous category, 9 and 9A will come in the last category separately. It will come in the last category. 9A is a ghost. So forget about 9A. Basically, you are talking about only GSTR 9. Only GSTR 9. What are the late fees there? Now here the late fees depends on your previous year aggregate turnover. Aggregate turnover, by the way, aggregate turnover not of previous year, aggregate turnover of, because annual return you will not file immediately. You will file after the year is over. You will file after the year is over. Aggregate turnover of current year and then late fees. If your aggregate turnover is up to 5 crores, if your aggregate turnover is up to 5 crores or it is more than 5 crores but up to 20 crores or it is more than 20 crores. If it is up to 5 crores, what are the late fees? What are the late fees? Rupees 25 per day of delay or wait, now the things are different. 0.02 percentage of state turnover. Whenever there's calculation, you will shift to, whenever there's a condition, whether you're big or small, you'll go to aggregate turnover. Whenever there's a calculation, you'll shift to state turnover. State turnover. Whichever is lower. Whichever is lower. Then, if your aggregate turnover in that year, please note the difference. For 1, 3B and 4, you focus on aggregate turnover of, but for annual return, you focus on aggregate turnover of, because annual return you will file after the year is over. So that year, aggregate turnover of that particular year. If it is your aggregate turnover is more than 5 crores but up to 20 crores, rupees 50 per day. Rupees 50 per day or 0.02 percentage of state turnover, whichever is lower. This is for CGST late fees. Copy paste, SGST late fees. What if it is more than 20 crores? Rupees 100 per day of delay or, but now there's a change, 0.25 percentage. Till now it was 0.02 0.02. Now it is 0.25% of state turnover, whichever is lower. Whichever is lower. This was CGST late fees, copy paste. Copy paste. HGST late fees. So late fees are different for different returns. Late fees are different for different returns. You need not read 1, 3B separately and 4 separately. You can read 1, 3B and 4, same late fees. 1, 3B and because for a composition scheme dealer, you'll have nil case and normal case, and normal case will stop at up to 1.5 crores. It will never be more than 1.5 crores. So you can read it together. So in 1, 3B and 4, late fees is different for nil return, normal return. Then you read it for 7, TDS. Then you read it for 5, 5A, 6, 8, 9B, 10. Normal case, all these balance cases. Then separately late fees for annual return. 9 and 9A, technically 9A is a ghost, so only we are talking about GSTR 9. GSTR 9. Those are late fees for different cases. Late fees for different cases. Only in one case you differentiate nil return and normal return. That is GSTR 1, GSTR 3B and GSTR 4. In all other cases, whether it is a nil return or normal return, whatever is the answer is same for nil return as well as normal return. Only in one case you differentiate it. That is GSTR 1, GSTR 3B and GSTR 4. That's everything about your late fees calculation. Late fees calculation. Now talking about your QRMP scheme. Who all can enter inside QRMP scheme? So QRMP scheme will be talking about your entry and will be talking about your exit. Entry and exit. Entry and exit. For entry point, if you are entering your previous year most important point. Your previous year aggregate turnover should be up to 5 crores. Up to 5 crores. For entry point, your previous year aggregate turnover should be up to 5 crores. Your previous year aggregate turnover cannot be more than 5. If it is more than 5 crores, forget about QRMP scheme. By the way, when I'm talking about your QRMP scheme, keep clearly in your mind that we are talking about regular taxable person and casual taxable person. Right? Second, when you're talking about your QRMP scheme, when you're entering, there is a window. You cannot enter just like Ganesh now. There is a particular window. In that window only you can enter. Only there is a proper window. That window only you can enter. What is that window? That window is first day of second month in previous quarter to last day of first month in current quarter. First day, second month, previous quarter. First day, second month, previous quarter. Last day, first month, current quarter. Put in simple terms. If I want to enter for QRMP scheme for July to September. July to September. What is previous quarter for July to September? July to September, previous quarter is April to June. What is second month? May. What is first day? First. So what is the window? First May to last day, first month, current. What is the current quarter? July to September. What is the first month? July. What is the last day? This is a window. You can enter only at this point of time. Because portal is designed in such a way that the moment you don't opt on 1st May, by default it will think that you are MRMP scheme. If it's not by 1st May, by 1st of, the last date is 31st July. By 1st August, it will think that you are under MRMP scheme. What is the first month of this quarter? July. If you don't decide before 31st July, by 1st of August, it will think that you are under, then portal will not allow you. You got that? This is the logic. And if you understand the last date, you will understand automatically the first point, starting point. So portal works in a particular manner. It will assume that you are under MRMP if you don't select it. And after that, you cannot do anything. After that, you cannot do anything. Now, understanding this, again, tell me the timing. First day, second month, previous quarter, last day, first month, current quarter. What was the last day for July to September? 31st July. 1st August, if you don't act, it will think that you are under MRMP. And when you understand that 1st August, for the next quarter, the starting date will be 1st August. The next quarter is October to October 2. For that, the timing is 1st August to 31st October. Likewise, it goes. And third condition, in that window, when you're opting, there should be no pending returns. You should not have any pending homeworks. Supposing you're opting on, say, 15th August. Can you opt? Is it within the window? Is it within the window? Yes. For July to September, can you say not 15th? Not August. Supposing you are opting on 15th June. What is the window? 1st May to 31st July. I am opting for QRMP scheme for July to September on 15th of June. 15th of, is it within the window? It is within the window for July to September. It is within that window. When I am opting, I should not have any pending returns. Pending returns on 15th June will not be June return. It will not be even May return, because May return will become due on 20th of June. You got that? You got that? So on 15th of June, whether June returns are due? No. Due date will be in July. Whether May return is due? May 3B is not due. Whether May month's GSTR 1 is due? Yes. You should have filed that. Whatever is your pending returns, you should have filed it. If you have not filed it, file it then opt. You should not have any due returns. What is pending return means? The returns which are due, you should not have it. If any due date has gone and you have not filed the return, first do that work. First, classic example, 15th June, I am opting. Is it within the window gap? Yes. Whether June return is due? No, it will become due in July. Whether May return is due? Wait. May GSTR 3B is not due. You need not file it. But whether May GSTR 1 is due? Yes. You should have filed it. You should have filed it. These are the conditions for entry. These are the conditions for entry. And exit. Now, exit can be for two reasons. Exit can be for two reasons. One, your current year aggregate turnover crosses 5 crores. Or you are voluntarily exiting it. You don't like it. You don't like your scheme. It is not crossing it, but you don't like it. You're going outside. Now, what is the only thing that you have to take care when you're going outside? You should opt out of QRMP scheme in that window. What is that window? First day, second month, previous quarter, last day, first month, current quarter. And when you're exiting, you're not exiting immediately. You're exiting from next quarter. Supposing my current year aggregate turnover crosses 5 crores in November. In November. October to December still I can go for. I will be exiting Jan onwards. I'm exiting in next quarter. I'm writing for forceful exit. Voluntary exit is my wish. So when I'm crossing 5 crores, I'm not exiting immediately. I'm exiting from next quarter. I'm exiting from next quarter. Jan to March. So Jan to March, I have to go for MRMP scheme. When I'm talking about exit, it is going to MRMP scheme. It is going to. Now there are certain differences. People confuse this with composition scheme. By the way, it is regular scheme. It has got nothing to do with composition scheme. People confuse it. There are certain different points. When you talk about entry, can you enter in between? Yes, you can enter in between. Can you exit in between? Yes, you can exit in between. Entry in between is allowed, exit in between is allowed. Entry in between is allowed, exit in between is allowed. Now, when you are inside QRMP scheme? Can you go for MRMP scheme in one state and QRMP scheme in other state? Yes. People confuse. This has got nothing to do with composition scheme. It is a regular scheme, but your written filing is quarterly. So in one state you can go for QRMP, other state you can go for MRMP. Entry in between allowed. Exit in between allowed. Whenever you can come at inside any point of time, you can go out any point of time. But when you are entering, condition should be checked. When you are exiting, obviously condition should be checked. Are you guys clear with this basic understanding about entry and exit? Entry and exit. Entry versus exit. We'll be discussing QRMS scheme in three parts. Conceptual part, entry and exit, done. Second, your part of GSCR1 versus IFF. GSCR1 versus IFF. Mini Italy and your Italy. Now, your GSTR1 will be there both under MRMP scheme as well as QRMP scheme. In MRMP scheme, it will be 3 months, and in QRMP scheme, it will be only after the end of the quarter. After the end of the quarter, only one. Whereas IFF will be only applicable in QRMP scheme, and that too it will be only for first 2 months. Clear? Now, what is the due date? What is the due date for IFF? 13th of next month. What is the due date for GSCR1? 11th of next month if it is MRMP scheme. 13th of next month if it is last month of the quarter, QRMP scheme. IFF is only for B2B supplies, and GSCR1 is for B2B as well as B2C. And IFF is only for B2C supplies, and maximum limit is 50 lakhs. You cannot put sales more than 50 lakhs. Here, no limit. Whether it is 50 lakhs, 5 crores, 550 crores, 500 crores, you can put it. You can put that. IFF is optional and it cannot be filed after due date. GSTR1 is mandatory and you can file even after due date on payment of late fees. Clear? These are the differences. Rather, most of the differences we have already discussed indirectly, except for IFF is only for B2B supply, so that the opposite person gets the credit. Only if you file IFF, opposite person will get in GSTR 2A, GSTR 2B, mainly 2B, he'll get the credit. And there is a limit of 50 lakhs. Whereas GSTR 1 is for all supplies, B2B as well as no limit. This is a new point. Right. And if I don't file in IFF, whatever is not reported in IFF, report in GSTR 1. See, I may have B2C supplies in April month and May month. Can I report in IFF? No. Report it in GSTR 1. Whatever is not reported in IFF, reported in GSTR 1. I may have B2B supplies in April month, but more than 50 lakhs. Suppose 60 lakhs. 50 lakhs I have reported in IFF. Balance 10 lakhs. Report in quarterly GSTR. See, whatever is not reported in April and May month IFF will be reported in quarterly GSTR. Will be reported in whatever is already reported, don't report it. What is not reported, report it. B2C supplies will not be reported in IFF, reported in quarterly GSTR. B2B supplies will be reported only up to 50 lakhs. Leftover portion reported in GSTR1. IFF is optional. I may have B2B supplies, but I will not have reported it. Don't worry, if you have not filed IFF, report it in quarterly GSTR. Quarterly GSTR. Whatever is not reported in IFF will come in quarterly GSTR. Whatever is not reported in first 2 months IFF will come in quarterly GSTR. B2C will surely come. B2B, part of it will come or it may come fully. Why? You have not at all filed IFF. You have not at all filed IFF. That is all about IFF and GST1. IFF and GST1. That's it. So first part is conceptual, entry and exit. Second part is outward supplies. IFF versus GST1. And the last part is payment and 3B. Payment and 3B. Now, supposing I'm talking about 2 quarters. April to June is previous quarter. July to September is current quarter. April to June, I was under QRMP scheme. Now also I'm continuing under. So when I'm continuing, there is no need of entry. I can continue just like that. Now also I'm continuing under QRMP scheme. Now in April to June QRMP scheme, my payment by cash for the entire quarter was 10 lakhs. What about July to September? So when you talk about July, August, September, when I'm paying by cash ledger is net output tax. Cash ledger is net output tax. I do have 2 options. One is normal option, self-assessment method, which means output tax minus input tax. Other is fixed sum method, which is a new method. Which is there only for QRMP scheme. Supposing I give you the data of July month output tax and ITC. Right, July month output tax and ITC output tax is say 10 lakhs, ITC is 7 lakhs. August month output tax is say 15 lakhs and ITC is say only 10 lakhs. Right, and September month output tax is 20 lakhs and ITC is say 17 lakhs. Right, this is my data. Now, what will be the self-assessment method answer for all the 3 months? If I'm going for self-assessment method, which is output tax minus input tax, what will be the payment by cash? What will be by payment by cash? Payment by cash will be 3 lakhs, 5 lakhs, 3 lakhs. Clear? Now, if I'm going for self-assessment method, this is the answer. Output tax minus input tax. If I'm going for fixed sum method, FSM, fixed self-assessment method is actual payment. Fixed sum method is approximate payment. Approximate payment, I have to see what I was doing in previous quarter. Previous quarter QRMP, this quarter QRMP. Therefore, approximate is 35% of cash paid in previous quarter. What is 35% of cash paid in previous quarter? What is 35% of cash paid in previous quarter? 35% of cash paid in previous quarter is 10 lakhs multiplied by 35%, 3.5 lakhs. 3.5 lakhs. By the way, wait. This method will be there only for the first 2 months. This method will be there for the first 2 months. When I'm entering the last month, I don't have an option, but I have to go for only self-assessment method on quarterly basis. Now, first let us understand first 2 months. It is just like, see, for outward supplies, you have weekly, minutely. For payment, they have complicated thing, then simple thing. Because they tell that they are trying to simplify, but they are not simplifying. They tell we have an option for you. You go with normal calculation or you go with special calculation. Normal calculation is self-assessment method, output minus input. Fixed sum method is some percentage. Now, how that some percentage is decided? Based on what you're doing in your previous quarter is QRMP, this quarter is QRMP. So we'll go with 35%. So how we got the 35%? Payment is monthly or quarterly? Payment is monthly or quarterly? Payment is monthly, but based on previous quarter. So 1 divided by 3. 1 divided by 3 means 33.33. Therefore, they thought that why not go with 33.33, unlucky number. We'll go with nearest number, 35%. That is how you get 35%. Clear? The logic of getting 35%. Now, you can select any one of them. If you want, go with self-assessment method. If you want, go with fixed sum method. Can I go select 1 month self-assessment method? Yes. Another month fixed sum method? Yes. Can I select self-assessment method in both the months? Yes. Can I select fixed sum method in both the months? Yes. But if I'm very clear with my calculation, I'll select whichever is lower. Whichever is. So what will be the final calculation after the end of the quarter? What is the total output tax and total input tax? Total output tax is 45 lakhs and total input tax is 34 lakhs, correct? 34 lakhs. So what will be your entire quarter self-assessment method? Your entire quarter self-assessment method will be 45 lakhs minus 34 lakhs, which is 11 lakhs, which is 11 lakh. But wait, you have paid something already. Less, you have paid something already in the first 2 months. What is the amount that you have paid already? 3 lakh plus 3.5 lakhs, correct? Not 5 lakhs. It could be 5 lakhs. If you have gone for self-assessment method in both the domains, you would have subtracted 5 lakhs. It could have been 7 lakhs. If you have gone for fixed sum method in both the cases, it could have been 7 lakhs. But I have selected which is more beneficial for me. So first month 3 lakhs self-assessment method because it was lower, and second month fixed sum method 3.5 lakhs because it was lower. So it could be very well 3 plus 5 lakhs. It could be very well 3.5 plus 3.5 lakhs. It could be very well 3 plus 3.5 lakhs. It is my option. It is my wish. So how much is to be paid? 11 lakhs minus 6.5 lakhs. What it is? What it is? 4.5 lakhs. 4.5 lakhs. Are you guys clear with this understanding? So this benefit is given only for what? First 2 months that they're telling that, okay, we want to give some more benefit. Rather than the name of giving benefit, they're complicating it. They're telling that you have an option for the first 2 months. You have an option for the first 2 months. Either go for SAM or FSM. Which is your wish? Generally speaking, I'll select the lower one, but can I select the higher one? Yes. I could have selected SAM for both the months. I could have selected FSM for both the months. And finally, when you're doing your end of the month, end of the quarter calculation, you don't have an option. You can go only for SAM for the entire quarter. SAM for the entire quarter is 11 lakhs. 45 lakhs minus 34 lakhs. What is the amount that I have already paid? If at all I have selected SAM for first month and FSM for second month, it is 3 lakhs and 3.5 lakhs. So what is the balance amount that I have to pay? Will it simplify my calculation or complicate my calculation? Every month I have to select. Then end of the quarter again I have to go back and all see. Even IFF is a complicated calculation. I have to see what is left out. I have to report in GST 1, which means end of the quarter I have to do homework for first 2 months also. Not only for GSTR 1 but also for payment and GSTR 3B. I have to see what I have done in the first 2 months. It is complicating my work. Are you clear with this understanding? A small change here. One doubt may come. So what if in the previous quarter you are under MRMP scheme? We are done with this, a small change. What if in the previous quarter you are under MRMP scheme? Then you will not check the payment of the entire quarter. You will check the payment by cash in the last month of the last quarter, last month. You will only check the payment which you have made in the last month of the quarter, which means April to June means you will check only June month. And to make the calculation same, I'll write it as 3.5 lakhs. I'll make change as 3.5 lakhs. So what is the change that I've done? I have changed last quarter QRMP to MRMP. I have removed payment by cash in entire quarter to last month. I have changed 10 lakhs to 3.5 lakhs. Why? Because understand that what is fixed sum method? Fixed sum method talks about payment in the first 2 months of a quarter based on something in last quarter. Now your payment in July month and August month will be based on June month. Will be based on, so it will be 100% of cash paid in last month of the previous quarter. If in the previous quarter you are under QRMP scheme, it is 35% of the cash paid in the entire previous quarter. In the entire previous quarter. If the previous quarter you are under MRMP scheme, it is 100% of cash paid in 100% of cash paid in last month of the previous quarter. Why? You are calculating for a month and your base is also month. You are calculating for July and August based on June month. July based on June month. August based on June month. You are trying to calculate for a month based on a month. So it will be 100%. It will be 100%. If you are trying to calculate for July month based on April to June quarter, it is 35%. August month based on April to June quarter, it will be 35%. Answer is the same because I have kept the numbers in such a way. Now that FSM calculation will be 100% of 3.5 lakhs, which is 3.5 lakhs. Same. I've changed the data in such a way that your answer is not changing. I've changed the data in such a way that your final answer is not changing. If your previous quarter is under QRMP scheme and you're trying to work out FSM for the first 2 months, it is 35% of cash paid in previous quarter. If your previous quarter is MRMP scheme and you're trying to find out FSM for first 2 months in the current quarter where you are under QRMP scheme, it is 100% of cash paid in last month of last quarter because you have that base. MRMP scheme na June or 3B irku, correct? Previous quarter you will be having separate GSTR 3B for June. You take that data from that. This is a change. Otherwise, everything else will remain the same. Every other calculation is the same. You have an option to select, etc., etc. In the first 2 months, you can decide for SAM or FSM. But when the quarter is ending, you have to only decide for. You have to only base your calculation only based on self-assessment method. For the first 2 months, either self-assessment method or fixed sum method. By the end of the quarter, you don't have an option. It is only self-assessment method. Take the entire output tax, take the entire input tax, find out the calculation. Subtract what you have already paid. If there is any difference, paid. If you already paid more, then there will be excess balance in cash ledger. If you are not interested, take the refund of the amount in cash ledger. That is how we do this particular work. Now, believe me, these are the 3 points of QRMP scheme. One is concept, entry and exit. One is IFF, GSTR. One is payment, GSTR 3B. Does it make your job simple or complicated? Whether this entire QRMP scheme, which is given for small persons, the objective of which is to be given for small persons so that they think that it will be useful and look at their calculation. They think that it will be so useful that when they're filing quarterly GSTR 3B, there will be so many people that there will be huge traffic on the portal. Therefore, at the end of the quarter, for payment and 3B, what is the due date they give? For southern part of India, 22nd of next month after the end of the quarter. For northern part of India, 24th of the next month after the end of the quarter. Thinking that there will be many people who are opting for it. Now, once you understand your entire QRMP scheme, it is evidently clear. It is not a simplified scheme. It is a highly complicated scheme. If you are trying to give benefit to small persons, it should be a very simplified scheme. You have made it very, very complicated. Therefore, many people who are eligible for QRMP scheme don't opt for QRMP scheme. That's everything about your QRMP scheme.